Starbucks, Chipotle, Meta, Microsoft, Google. Ladies and gentlemen, we are live. I gotta pull this freaking Starbucks one up. This started like 4 minutes ago. I've probably missed part of it. Pull this up on a new browser. Starbucks Investor Relations. Rough Powell Day. You got that right. I lost 2,700 on Powell's speech. I think so. I think that was my final. It might have been right about there. Let's see. I'm posting about it later because somebody clipped my picks and I made a post and I'm like, we were on fire today. Rip $2,653 on Powell. But Gusta, we're going to make it all back when AL wins, right? Let me get Starbucks up. Agree. Come on. Here it is. Earnings conference call. I've already missed 5 minutes of this to register. But we're going to make it all back on the earnings. Isn't that right, guys? You're chasing Powell with pumpkin spice, yes? I'm on pumpkin spice, no. Are we counterparties?
We expanded rosters and maintained healthy hours per partner. And as a result, we had strong partner engagement, record low hourly partner turnover, and improved customer experience scores in the fourth quarter.
All I'm really
Even
riding
though we're only 2 months in, we're seeing the results we want for Green Apron service, and we're encouraged by the future opportunity
spice, no. That's like my one big play.
As our partners adopt the standard and our customers experience the difference. We set throughput goals to ensure customers get their order on time, every time, whether it's in cafe, mobile order, or in the drive-thru. As part of our Green Apron service rollout, we launched our Smart Queue sequencing algorithm. Since implementation, more than 80% of our U.S. company-operated coffee houses had cafe service times averaging 4 minutes or less, even with greater transaction volumes following our fall launch. Average drive-thru service times are still below our 4-minute target, and mobile order and pay remains highly accurate and on time. Our delivery business in the U.S. has also continued to expand rapidly,
I want to make sure
growing nearly 30% year over year in the fourth quarter and surpassing $1 billion in sales for the full fiscal year. And we will be nearly complete with the rollout of our Clover Vertica brewer in our U.S. company-operated coffee houses by the end of Q1, making it easier than ever for customers to get a fantastic and freshly brewed cup of coffee of their choice.
Rooting for
Second, we're now delivering a great customer experience in coffee houses that are more warm, welcoming, and connected to their communities.
But let's see.
Earlier this year, we shared that we were reassessing our North American portfolio. The reality, as we came to learn, was that we were operating some coffee houses that didn't demonstrate a viable path to profitability or create a warm, welcoming space for our customers and partners. As a result, for the full year in fiscal 2025, our North America company-operated store counts declined by approximately 1% on a net basis.
Are there any you want me to focus on?
With a healthier base of coffee houses, we see meaningful opportunity for growth.
Obviously.
We're taking a disciplined approach to how,
Meta and Chipotle start in
to improve both the customer experience and unit economics.
Should I play 3 earnings calls?
We are piloting a new coffeehouse prototype with lower build cost and optimized space utilization that still deliver a full coffeehouse experience aligned to our brand. In fact, last month, we converted one of our pickup-only locations in New York into a small format version of this prototype. We're excited to test, learn, and iterate. Our teams are also working at pace to ramp up our Uplift renovation program.
Dang, Tyler is counterparties with like
texture
everyone.
And seating back into our coffee houses. As of the fourth quarter, we completed nearly 70 uplifts, primarily across New York and Southern California. It's a small sample size, but we are encouraged by the improvements to sales and transactions we've seen to date. We are working to complete more than 1,000 of these uplifts by the end of fiscal 2026. Third, we've overhauled our marketing and our menu innovation, and it's driving stronger customer perception scores and market share growth in the U.S. On the heels of a successful fall launch, we introduced protein cold foam and protein lattes at the end of September. They taste great, and they're made from premium ingredients, living up to the Starbucks standards. And they kick off a steady pace of disciplined, stage-gated innovation in our menu pipeline. We're only about a month in, and we're learning a lot. Customer awareness continues to build, and it is bringing less frequent customers into our coffee houses.
Exactly, Dustin.
We're
That's
excited
what we're
about the
doing. We got
incremental
5
nature of
earnings
this
calls today.
platform
We got
and its
5
long-term
tomorrow.
goal.
We are not ending
Our
this week
measure for
down.
brand affinity accelerated in the quarter, reaching its highest point since 2023.
We are
and
ripping
Starbucks
it back.
ranking as customers' first choice was a 5-year record high.
Oh, they
We saw
already
the
hit for
biggest
protein?
gains in
I
service
wish I
time,
got more there.
connection, and care perceptions, demonstrating the power of Green Apron service.
I only got
Non-Starbucks
100
rewards
shares, but
customer
it really was
transactions
such a
grew year
bond.
over year for the second consecutive quarter across all day parts, validating our approach to marketing. And value perception strengthened across all generations in the fourth quarter and for the fiscal year, driven by our investment in Green Apron service and our proactive moves to bring back the condiment bar, simplify our pricing architecture, and remove the extra charge for non-dairy milks. We know our value equation extends beyond
Is this
pricing.
helpful if I bring
And
the
when we
transcript
provide
in?
great customer service alongside handcrafted, personalized beverages made with high-quality ingredients, we provide unmatched value
What's the
to our
difference between
customers.
putting shares versus money down?
Turning to international, our growth agenda
mean,
and Back to
kinda
Starbucks
the same
principles
thing.
span well beyond North America. In the fourth quarter, our international business reached
always do
record
limit
revenues of
orders,
$2.1
Oracle.
billion and ended the
Just
year
to
with
make
an
sure so you
all-time
can look
high
at the
of
order book, make sure you're
$7.8
getting it
billion.
at like a good price.
We continue to extend our
me
global
see if I can
reach,
pull
opening
in. Oh, non-dairy hit
316
for
net
yes?
new coffee houses in the fourth quarter for a total
Wow.
of more than 900 in fiscal
Man, these
2025.
like order books are updating.
We also
kinda
opened
slow.
brand-building Starbucks flagship coffee houses, including
Holiday
inside the
still hasn't hit.
legendary
I think
Santiago
it'll come.
Bernabéu Stadium in Madrid, with more flagship coffee houses in store for 2026. We'll bring one-of-a-kind experiences centered on
We're
coffee
really
and
just
craft
sweating
to
pumpkin
even more
spice.
customers
That's our
around
main
the world.
play.
In China, the team continues to drive
China
demand
hit.
in a competitive marketplace, delivering
Speaking of
2%
China,
comp growth in Q4.
Luckin Coffees are now
its second
opening in New York.
consecutive
I see
quarter
them
of
all over
positive
now.
comps,
Kind of interesting.
and our portfolio crossed 8,000 stores. On the strategic front, we've had very strong interest from multiple high-quality partners, all of whom see significant value in the Starbucks brand and team.
Here, I'm gonna
We
pull in
expect
the
to retain a
transcripts for
meaningful
you guys.
stake in Starbucks China
This'll be
and remain
helpful.
confident in the long-term growth potential in the region. As I reflect on fiscal 2025, we did important work to rebuild our core and strengthen our foundation, and we're entering fiscal 2026 on stronger footing. Looking to Q1, the holiday season is a cherished moment for our customers and for our business. It's the first time we're bringing all our work together. Our coffee houses will be more warm and welcoming. They'll be better staffed. Orders
the
will be better
transcript.
sequenced. We'll have a relevant menu with holiday classics like the peppermint mocha
No.
and snowman cookie,
Oh,
alongside
he hit
returning
holiday,
favorites
but
like
I was-
the eggnog latte.
Oh my gosh,
which
he was talking
customers
about
have been
holidays.
asking
I
us
was
to bring
scared he was
back
going to
for
say
years.
pumpkin spice.
We'll have engaging new ads and great new merchandise.
We
that's
survived
worth
through there.
gifting,
That's a big one to
like our
survive.
limited edition Barista glass mugs and Hello Kitty collaboration. And we'll have newly designed gift cards, which have
Wow,
become
how did we
holiday
survive pumpkin spice there? He's
As we
talking
bring it all
Christmas.
together, I'm confident the holiday season at Starbucks will be iconic, and our customers will see and feel the difference. Building on investments made in fiscal 2025, we're focused on executing with excellence and driving growth through innovation in fiscal 2026.
Still no
Our
comparable
intent is
sales.
to become the world's best customer
Man,
service
I
company.
tried sizing
To
up
do
into all
this,
these. I
we'll
really
double
couldn't
down
get
on
in.
Green
I'm
Apron
annoyed.
service by
Tried to do
empowering our
1,000
leaders
shares. You
in
can see
and
I barely
above
got
the
fills.
coffee house.
As long as
We'll
pumpkin
scale the
spice
assistant
holds.
store manager role across more company-operated coffee houses, and we'll dramatically simplify store-level reporting from nearly
Yeah,
2
I
dozen
know.
metrics
Kevin, that
down
was
to a
scary for
scorecard of
pumpkin
just 5
spice.
KPIs that best correlate to comp growth. These are focused on the customer, the partner, transactions, inventory availability, and food safety. We are giving our partners the tools, roster, and processes to consistently deliver our standard. And as we work to deliver a consistent customer experience across every coffee house, we're also improving how we work with our licensee partners to provide more tailored support, drive operational excellence, and profitably grow together. Just last week, we hosted our North America licensee partners here at our support center, and we're excited for what's ahead. As we work to lead in culture, we're driving continued menu innovation that wins the morning and helps us earn the afternoon. In 2026, we'll introduce an up-leveled bake case that features new artisanal bakery products and elevated service wares to mirror our coffee house vibe. And building on our recent matcha
I
reformulation,
know.
we'll continue to optimize and uplevel
No,
our
live
matcha menu
transcript
with
is
more
it's actually
customizable
from
offerings
Starbucks.
that meet customer needs and stay true to our brand.
This is like on their page.
Work continues
but I
on our
figure it's just
supply chain
helpful
to
so you
support
guys
our
can
pace
see
of
the words
innovation
coming in,
and
right?
improve inventory availability. And through 2026, you'll see us announcing improvements to our rewards program and mobile app and new brand activations. Our strategy is only as good as the people who are executing, and over the past year, we underwent significant change and fast. We asked a lot of our partners across the company, and they're delivering with excellence to build a stronger Starbucks. I would like to take a
We're
moment
holding
to
pretty
thank
well.
our Green Apron and
Little
support
annoyed I couldn't
partners
size
who are
up into
working
some of
hard
these.
to bring our strategy to life every day. You really can feel the energy and excitement in our coffee houses, and the change is real, and our partners are leading it. Whether it's Melissa and her team in Austin that's built up such a strong community there, Jessica and Mary Beth in Nashville, who are clearly dialed into what it takes to deliver great customer service, or Oscar in New York and his commitment to coffee house
Good old
excellence.
Oscar in New York.
Your focus
Shout
on
out to
coffee,
him.
craft, and connection is truly making a difference. So as I conclude, let me put it simply. We set a plan, we're working the plan, and the plan is working. We have more work to do,
He's gonna
but
hand
we're
it
building
over.
momentum. Regardless of the headwinds and tailwinds we may encounter, I'm confident we have the right team and strategy to deliver long-term, sustainable growth.
Yeah, isn't that
I'll now
crazy,
turn
Clay,
it
how
over to
early
Kathy
these
to
are
share
starting?
more detail on our financial results.
Guys, we have Starbucks
Thank you,
415,
Brian.
Chipotle
I'll
430,
start
Meta
where Brian
430,
ended
Microsoft
by also
530,
thanking
Google
our partners
530.
around the world for their focus and commitment
Wow,
to
we're
building back a better Starbucks.
Looking good. Let's
Their
lock in
hard
on
work
pumpkin
helped
spice.
us gain traction in the fourth
We
quarter
need
and
recovery
deliver
after
on
Powell.
some critical objectives that we believe will bring us back to sustainably growing both the top and bottom line. I'll now discuss our Q4 results. Our Q4 consolidated
where
revenue was $9.6 billion,
comparable sales can hit.
up 5% to the prior year, reflecting 2% net new company-operated store growth and a
What's
1%
up,
increase in global comparable store sales, driven by international outperformance,
Oh, really?
positive comps in Canada, and
Clay,
continued
you should have
progress
looked at my
in our
timer.
U.S.
I put the
business.
schedule out on all the mentioned markets.
In the
I
U.S.,
had
our
people
comparable
locked in.
store sales were flat year over year,
Comparable
with
store
ticket
sales,
up 1%,
not
reflecting
comparable
fewer
sales. Are
discount-driven
people gonna
offers
bond
in the
this
current
for-
year.
Let me see if I can get some
While
no's.
U.S. company-operated transaction
That was
comps
comparable
were
store
down
sales.
1%, we marked our fourth consecutive quarter of improvement. We are rebuilding our transaction base as we focus on improving the overall value
Anyone
proposition
trying to
for our
fill
customers.
this?
We were especially
I know.
pleased to
I'm gonna
deliver
see if anyone dumps
transaction-led
into it.
comp
Did
sales
anyone?
growth approaching 1% in September, as we benefited from the first full month of Green Apron service across our U.S. company-operated coffee houses, as well as the timing
Wow,
shift
she said
of our
comp
fall
sales?
launch.
Somebody's
Our
battling me
90-day
in the order
active
book.
Starbucks Rewards member
Bite
base
me.
grew 1%, both quarter over quarter and year over year, to
I gotta be
34.2
ready to
million
pull
members.
this.
This was led by higher re-engagement and fueled by
who is this
customers
500
returning
share
for
bid?
their seasonal favorites and new offerings as part of our fall launch. Transactions among
Ooh,
this
new
cohort
offerings as part
also
of fall launch
continued
and
to
no
improve in the
mention
fourth
so
quarter,
far of pumpkin
and
spice.
our intentional shift away from last year's discounting strategies drove a healthier mix of non-discounted transactions. As Brian mentioned, non-Starbucks Rewards customer transactions in the fourth
Wow,
quarter
this order
grew
book is,
year
like,
over year for the second consecutive
crazy.
quarter.
Wish I could have gotten some
Our
fills
U.S.
there.
licensed store portfolio
I mean, I only
revenue
have 15 shares.
declined
I don't
in
really
Q4,
care about this strike, to be honest.
primarily
I tried to
due
get
to
1,000.
trends in
Of course, I didn't
the
get
grocery
1,000. I
and
would have been
retail
at 30
channels.
cents. I'm annoyed. I didn't fill
Travel
these. I
remains a
love these
bright spot,
positions.
however, with airports
But I posted
delivering
them
positive
before I filled
transaction
my
and
own
ticket growth in
positions,
the
which was
quarter.
really stupid.
The college and university
But that's how
segment
much I care
also
about giving you
showcased
guys
year-over-year
alpha, that I
growth,
post my positions
supported by
before
a
I'm
good
filled.
start to the fall semester. Moving on to international. This segment reported 9%
Wow.
year-over-year
Moving on to
net
international, I
revenue
mean, I don't
growth
think we're
in
gonna
the
see
fourth quarter,
comparable sales. Are there-
delivering another record of
Like, what is
over
this
$2
order
billion.
book? It's like
Many of
so
our
not
top international
refreshed.
markets contributed to strong comp sales
yeah, there's
performance in the
literally
quarter,
nothing in the order
with
book.
China,
Wow.
Japan, the UK,
Crazy.
and
I wish I
Mexico
got
leading the
filled
way.
there.
China continues to grow and improve profitability. Starbucks China's comparable store sales grew 2% in the quarter,
She's not
driven by a
saying
9%
comparable sales.
improvement in comparable
Not
transactions.
Looking good for comparable
The market's
sales. That's
comp
pretty
growth
hilarious.
was driven by continued
She's saying
product
everything
innovation,
but comparable
particularly
sales.
in its tea latte lineup and a
Crazy.
fast-growing delivery business. The team remains nimble in optimizing its product and pricing architecture in a dynamic marketplace. Moreover, Starbucks China's healthy unit economics keep us motivated to capture the abundant white
China
space
getting a lot of
we continue to
mentions.
see in the region. As Brian mentioned, we remain focused on our search for the right
I wish there
partner
were
to help
some
unlock our
market
future
maker
growth potential in China.
on comp sales.
As
I
a
would be
reminder,
hammering
the value to
those,
Starbucks in a
but there's,
potential
like, nothing
transaction
here.
includes three things: the upfront investment by our future partner, Starbucks retaining a meaningful stake in the China business, and future royalty payments.
I didn't know Starbucks
In
was so
our
big
channel
in China.
development segment, our
guess I
Q4
need to
net
do more
revenues grew
research.
16% year over year due to higher revenue from the Global Coffee Alliance.
Well,
We remain market share leaders in
Chipotle
the
and
North
Meta are
America
live right
at-home
now.
and
Hopefully I
ready-to-drink
do okay
coffee
on those.
categories amid a challenging coffee price environment. We
Chipotle,
continue
I
to
got,
work
like,
with our
nothing. I
partners
couldn't
to
get any
adapt and
fills.
innovate to broaden our reach beyond our cafes.
Meta,
In fact, the 2024
I'm
launch
mostly
of
on
our
Yes
protein
China.
drink in the UK has exceeded our expectations,
Kinda my
resulting
big
in
position in
growth
No
into
Channel.
8 additional markets in 2025. We have expectations to expand this further next year, including in the U.S. through our North American Coffee Partnership. Shifting to margin, our Q4 consolidated
I'm gonna
operating
move to
margin was
Meta
9.4%, contracting 500
towards
basis
the end
points
of
from the
this.
prior year. This was primarily driven by inflation, led by coffee prices and tariffs, as well as investments in support of Back to Starbucks, largely in labor hours. Consolidated G&A in the quarter decreased by 2% versus the prior year to reach approximately 6.6% of revenues. And with our interest expense and effective tax rates generally coming in line with our expectations, Q4 EPS was 52 cents, down 34% from the prior year. In the fourth quarter, we took decisive
I
action
have to
on
edit
multiple
my
fronts
Twitch.
to accelerate getting back to Starbucks. This included the completion of our assessment of our coffee house portfolio and identified closures, as well as a simplification of our broader support organization to one that is streamlined and more closely aligned to our future growth priorities. Let me walk through some of the impacts to our financials. In the fourth quarter, we had 107 net store closures globally as part of the restructuring we announced in September. These coffee houses were deemed unable to meet our standards for customer experience, even through a potential uplift, or for profitability. Many fell under both categories. As a result of these closures, we expect a reduction in our baseline North America company-operated revenues, partially offset by sales transferred to nearby coffee houses that remain open.
She's
We
still
also
not saying
expect
comparable
the impact
sales.
to operating margins
Crazy.
to be slightly accretive. As we look to the future, we are focused on disciplined capital deployment, with work underway to reduce build costs and improve the profitability of new
1,200 shares
coffee
of
houses,
protein? No,
while
I thought this
continuing
already
to deliver a warm,
hit.
welcoming coffee house
Did
environment.
this really not hit?
Given that our development pipelines naturally carry long lead times, we expect the benefits of these strategic changes to flow through our P&L gradually over a multi-year
Did protein
period.
really not hit, Clay? Are you sure?
In the near term, however, we expect that the cost reduction
I
related to
thought we were saying it
streamlining our
hit in the
support
beginning.
structure
Let me
will have
control
more
F.
immediate impacts to our P&L.
Protein already hit.
As such, we expect that our consolidated G&A
Yeah.
in fiscal
It's
2026
in the
will
transcripts.
run lower
Look,
than
you
fiscal
can see I'm
2023
searching
levels,
it.
serving as a partial offset to our Back to Starbucks investments.
I guess I should just bond protein then.
While we
people-
expect to provide our
whatever.
near and longer term outlook
was
during
said.
our
It's in the
Investor Day in
transcripts.
late January, the following are some initial considerations for our U.S. company-operated business for fiscal 2026. We're pleased with the progress we've made to date, with our positive comps in September continuing through October. Our Green Apron service standard is ramping, and we're no longer lapping heavy levels of promotion in fiscal 2026. We're excited about a strong holiday lineup, future
Will
menu
we get
innovation, and our coffee house uplifts.
China hit from Meta.
We also recognize that we have more work to do as we continue to rebuild
It
our
has,
transaction
Gustavo.
base.
It was during Powell. It was kinda
Turnarounds are
glitchy.
difficult to
Hopefully
forecast.
it gets
And
fixed.
while we have good reason to believe that our U.S. company-operated comps
I don't know.
should
The fact
build
that it's
through
going
the
into
year,
finance people
we
makes me
also
think we're
know
going to
that
be
recoveries
okay
are not
on pumpkin
always linear.
spice, but I guess it could come up during
Moving to
Q&A.
earnings,
I don't
we
think it
remain
historically
disciplined on
has.
costs as we focus on allocating our resources to our
So,
Back to Starbucks priorities.
I
Our
might
investments
move
in
on
Green
to
Apron
Meta.
service will annualize
You think so,
through
Yaza, at this
fiscal
point?
2026.
Okay, I'm going to move on to Meta
We'll
earnings
also stay
then.
nimble in navigating the current environment where tariffs and
pull up
coffee
Meta.
prices remain
Because
dynamic.
Meta, we want the
As
China
we continue to
mention.
grow, Our goal is that
And-
every transaction is higher quality and more profitable.
Okay,
We're on
let
a
me move to
multi-year
Meta
turnaround.
earnings.
Q4 was a turning point, having delivered the first quarter of global comp growth in 7 quarters, and we're encouraged by our trends to date in Q1. We're focused on driving our top line and managing the costs that are within our control, giving us confidence in our path to sustainable, durable,
pulling up
long-term
Meta.
growth. As a token of such confidence, we announced an increase to our quarterly
Well, that'll be
dividend
awesome, guys.
earlier
That'll
this
be like a
month,
$600 payout.
recognizing our 15th consecutive year
600.
of increase.
That'll be nice.
We are
need to
clear-eyed
rebound
about the work
after
ahead of
Powell.
us, and we're excited about our future. And with that, we are now ready to take your questions. Thank you. Operator?
First
Thank you.
question, he's going to be like, what
As
do
a
you think
reminder,
about
if
pumpkin
you would like to
spice?
ask a question,
let
press
me pull up.
star, then the number 1 on your telephone keypad. In order to allow as many questions as possible, we ask you to please limit yourself to 1 question at a time. We will
They're
come
rising
back
to
for
the
follow-up
challenge, and I'm
questions.
grateful for their dedication,
got
hard
Mark
work, and
talking.
creativity. As always, thank you all for being a part of this journey with us. And now, here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our segment results. All comparisons are on a year-over-year basis
Meta
unless
doesn't
otherwise
really
noted.
show.
Our community across the family of apps continues to grow, and we estimate more than 3.5 billion people used at least one of our family of apps on a daily basis in September.
Here's Meta's transcript.
Q3 total family of apps revenue was $50.8 billion, up
Look at that, guys. I got
26%
you guys
year
the
over year.
transcript up here.
Q3 family of apps ad revenue was $50.1 billion, up 26%, or 25% on a constant currency basis. In Q3, the total number of ad impressions served across
All
our
right, let's
services
move
increased
over
14%.
to Meta.
Impression growth was healthy
we're
across
looking good
all
here on
regions,
Starbucks if we can
driven by
hold.
engagement and user growth,
Let's go
particularly
to
on
Meta.
video surfaces. The average price per ad increased
So our main
10%
play
year
here,
over year,
guys, is on China.
benefiting from
get
increased
fills on
advertiser
anything else.
demand, largely driven by improved ad performance. This was partially offset by impression growth,
So let's see some
particularly
China
from lower
mention.
monetizing regions and surfaces. Family of apps other revenue was $690 million, up 59%, driven by WhatsApp paid messaging revenue growth,
WhatsApp.
as well as Meta verified subscriptions. Within our Reality
Isn't
Labs
WhatsApp
segment,
mostly China?
Q3 revenue was $470 million, up 74%
Yeah,
year over year.
I know what you're saying, Dustin.
The
It is-
significant
it's
year-over-year
kinda bad. I
growth
really hope
in
they figure it
Q3 was
out.
partly due to retail partners stocking up on
You gotta,
Quest
like,
headsets
refresh every
ahead of the
time.
holiday
It was
season.
really weird in the
We did
Powell
not have a
speech.
similar benefit in the third quarter of last year,
I couldn't even
since our
tell
Quest
if there were
3S
shares out
headset
or not.
launched in the fourth quarter of 2024. Aside from this, strong AI glasses revenue also contributed to revenue
AI
growth
glasses.
in Q3.
So they're
Moving
not
now to our
calling it-
consolidated results. Q3 total revenue was $51.2 billion, up 26% or 25% on a constant currency basis. Q3 total expenses were $30.7 billion, up 32% compared to last year. Year-over-year expense growth accelerated 20 percentage points from Q2, due primarily to 3 factors. First, legal-related expense growth was higher than in Q2, due to charges we recorded in the third quarter, as well as us lapping a period of accrual reversals in the third quarter a year ago. Second, employee compensation growth accelerated, driven by technical hires, particularly AI talent. Finally,
Focus on
growth in
AI.
infrastructure costs accelerated due to increased infrastructure operating costs associated with our expanded data center fleet,
Guess I'll go
depreciation on our
go for
incremental
the white
CapEx
tea.
spend, and third-party cloud spend.
Come on, let's get some China.
We ended
talk.
Q3 with over 78,400
Man, I look
employees,
so much more
up
professional in the
8%
jacket.
year over
When I
year,
take that off, I look
driven by hiring in priority areas of monetization,
just like
infrastructure, Reality Labs, Meta Superintelligence
All right,
Labs,
I'll keep on
as
the
well as
jacket. I'll stay
regulation and
hot.
compliance. Third quarter operating income was $20.5 billion, representing a 40% operating margin. Q3 interest and other income was $1.1 billion, driven primarily by unrealized gains on our marketable equity securities. Our tax rate for the quarter was 87%, which was unfavorably impacted by a one-time non-cash reduction in deferred tax assets that we no longer anticipate using under new U.S. tax law. Our tax rate would have been 14%, excluding this charge. Although the transition to the new U.S. tax law resulted in an accounting charge in the third quarter, we continue to expect we will recognize significant cash tax savings for the remainder of the current year and future years under the new law, and this quarter's charge reflects the total expected impact from the transition to the new U.S. tax law. Net income was $2.7 billion, or $1.05 per share. Excluding the one-time tax charge, our net income and EPS would have been $18.6 billion and $7.25 per share, respectively. Capital expenditures, including principal payments on finance leases, were $19.4 billion, driven by investments in servers, data centers, and network infrastructure.
Man, look at
Free
us.
cash flow was
Look at us
$10.6
watching
billion.
all these earnings calls.
We
learning,
repurchased
growing.
$3.2 billion of our Class A common stock and
Look how
paid
smart we're
$1.3
getting.
billion in dividends to shareholders. We ended the quarter with $44.4 billion in cash and marketable securities and $28.8 billion
No
in
clue
debt.
what is going on.
Turning now to the business outlook. There are
All right,
two
business
primary
outlook. Let's
factors
talk
that drive
China.
our revenue performance: our ability to deliver engaging experiences for our community, and our effectiveness at
Engaging
monetizing that
experience
engagement over
for
time.
your China community.
On the
That's
first,
the focus.
daily
Let's
actives
go.
continue to grow year over year across
She
Facebook,
is cooking.
Instagram, and
She's
WhatsApp.
like in a flow.
We're continuing to see improvements to our products and recommendations
Whoa.
drive incremental engagement,
just happened
with
in
year-over-year
Starbucks?
growth
Did they
in
just
global
say
time spent accelerating
something?
on both Facebook and Instagram in Q3. In the U.S.,
What's
overall
going
time
on?
spent on Facebook and
Why is
Instagram
this
grew double
so
digits year over year,
thin?
driven by continued video strength
Did pumpkin
as well as
spice hit?
healthy growth in
I'm getting
non-video
scared.
time on
Let me
Facebook.
look in the
The engagement
transcripts.
gains continue
Shoot,
to
did
be
I
driven
close
by
out of it?
product work and ongoing improvements to our recommendation
No, I didn't.
systems as we optimize our model architectures, implement advanced modeling techniques, and
Just
integrate more signals about people's interests. We also continue to focus on increasing the freshness of
They did not say
recommended
pumpkin
content.
spice. Oh my gosh, that's
On
scared me.
Facebook,
They
our
said
systems are
pumpkin
now
twice.
surfacing twice as many reels
probably
published that day than at the
FOMO'd
start of the
people.
year.
Holy.
Looking to 2026, we expect to advance our recommendation systems across several dimensions.
Yeah, mine are too.
On
Clay. They are
Instagram,
kinda
one focus is evolving our
bugging out.
systems to surface content across a broader set of topics that cater
we're
to the
still
diverse
living on-
interests of each person.
I don't know about comparable sales. though.
This
I can-
follows a similar approach we've
can
implemented
control
on
F it. Let
Facebook
me
that has
see.
driven good results.
Um,
We also expect to make significant progress on our
No,
longer-term
comparable sales has not
ranking
hit.
innovations in 2026.
not in the transcript.
We're seeing
came up.
promising new results from our research efforts
actually
to
orders
create
available?
foundational ranking models, and expect the new
No.
model innovations we're
Empty order book.
developing as part of this will enable us
Yeah,
to
people
significantly
pulled all their
scale up
sell
the amount
bids.
of data and compute we use to train our recommendation models in 2026, yielding more relevant recommendations.
Hold.
Another large focus next year is
Well,
leveraging LLMs to improve
I
content
need to see
understanding.
China hit here.
We expect this is going to enable our systems to more precisely
Doesn't
label
seem
the
like it's gonna be in
keywords
the
and
prepared
topics within
remarks.
videos and posts,
Hopefully, people ask about
which will
China.
allow our systems to both develop deeper intuition about a person's interests and retrieve the content that matches them. Finally, we're making good progress with Meta AI and Threads.
How's Meta not
The number
gonna
of
talk
people
about
using
China?
Meta AI across our family of apps continues to grow, and we're increasingly leveraging first-party content into Meta AI results, with the majority of Meta AI's responses to Facebook deep dive queries in the US now showing related reels. We're also seeing a lot of traction with media generation. People have created over 20 billion images using our products, and since launching Vibes within Meta AI in September, we've seen media generation in the app increase more than tenfold. On Threads, we see strong growth in both
Do
daily
people actually
actives
use
and the depth
Threads?
of
I've never
engagement
used
as we
Threads.
continue to improve recommendations.
I hope Threads doesn't
The
blow
ranking
up, 'cause I love
optimizations
Twitter.
we made in
I
Q3
don't
alone
wanna have
drove
to
a
find and
10%
research
increase
another
in
algorithm.
time spent on Threads.
I had to figure
We
out
also
how Twitter
continue to
works.
ship new
Do I have to move
features,
to Threads?
including launching direct
Was
messaging
Peppermint
in
said? Let me
Q3,
check.
so anyone on Threads can now message one another within the app.
No, it was not.
Now to the second driver of our revenue performance,
No Peppermint
increasing
mentioned.
monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. we continue to refine ad supply across each of our major surfaces within Facebook and Instagram to better
love Twitter,
deliver
too.
ads at the time and place they are most relevant to people. Longer
Twitter's,
term,
like,
we
too
have
addicting,
exciting
though.
ad supply opportunities on both Threads and WhatsApp Status. Ads are now running globally in
Man, if we
feed
can
on
get this
Threads,
China hit here,
and we're
that's what we
following our
need.
typical
We'd be
monetization
locked
playbook
in.
of optimizing the ads formats and performance before we ramp supply. Within WhatsApp Status, we're continuing to gradually
Good on
introduce ads
hiring.
and expect to complete the rollout
Still
next
no
year.
VR mentioned. Should I go no
The
on
second
VR?
part of increasing monetization efficiency is improving marketing performance.
Man, I wish
Advancing
I
our
coulda
ad
sized up
systems
in all these
remains a critical
positions.
aspect of
I
this
got
work,
like no fills.
and we are driving performance gains through ongoing improvements in our larger scale ads ranking models. For example, we continue to broaden the adoption of Lattice, our unified model architecture.
Do I
In
still feel
Q3,
good
we
about
rolled out
China?
Lattice to app ads, which
I think
drove a
China's
nearly
gonna hit
3% gain in
in the
conversions
Q&A, if
for
anything.
that objective.
I don't think they would say it in prepared remarks.
Since
I
introducing
mean, I feel
Lattice
good
back
about
in
it.
2023,
They didn't say it last
along with other back-end improvements,
earnings call, but they
we have
said it
now
like
cut the number of ads
4 or
ranking and
5 straight
recommendation
before
models
that.
by
And I got
approximately
yes at
100
like 39 cents.
as we
So I
consolidated
think it was a
smaller
pretty
and more
decent pickup,
specialized
but we'll
models
see.
into larger
Maybe I
ones
was
that
wrong.
use the Lattice architecture to generalize learnings across surfaces and objectives. We continue to observe performance improvements as we combine models and expect
Would I
to
buy at
drive
60
additional
cents, though?
gains
No,
as
I
we
don't know who's buying
consolidate
that.
another 200 models over the coming years
Yeah, I
into
mean,
a
I'm not
smaller
selling. I
number
couldn't sell
of
if I
highly
wanted
capable
to. I have
models.
way too big of positions in the order
In
book
addition
for
to advancing
super
our
thin during the
foundational ads
speech.
models, we're innovating on our runtime models we use downstream of them for ads inference. For example, we began piloting a new runtime ads ranking model in Q3 that leverages more
Come on, hit the
compute and
China
data than our
mention.
prior models to select more relevant ads. In
Let's
testing,
go,
we've seen
China.
this new model drive a more than 2% lift in conversions on Instagram. We also significantly improved performance of Andromeda in Q3 by combining models across retrieval and early stage ranking into a single model, driving a 14% increase in ads quality on Facebook surfaces. Within our ads products, we're seeing continued momentum with Advantage Plus. In Q3, we completed the rollout of our streamlined campaign creation
Ads
flow for
Plus.
Advantage Plus lead campaigns. So now advertisers running sales, app, or lead campaigns have end-to-end automation turned on from the beginning, allowing our systems to look across our platform to optimize performance by automatically choosing criteria like who to show the ads to and where to show them.
Wow.
The annual run rate of revenue running through our
How
end-to-end
incredible.
automated solutions has
They're
now
so
reached
good at
$60 billion
showing
following the
ads and keeping
implementation
people stuck
of
on
the
their
new
phones.
streamlined
I mean,
creation flow,
look, I'm not going
as
to be
we continue to
anti-meta. I'm
see
stuck
more
on my
advertisers
phones.
leverage the performance benefits of our solutions. Within our Advantage Plus Creative Suite,
But it's
the
hard
number
to
of
be
advertisers using
super
at least
passionate
one of
about
our
Meta.
video generation features was up 20% versus the prior quarter, as adoption of image animation and video expansion continues to scale.
Let's talk about the
We've also
international
added more
business.
generative AI features to make it easier
See
for
some
advertisers to optimize their
coming in.
ad creatives and drive increased performance. In Q3, we introduced AI-generated music, so advertisers can have music generated for their ad that aligns with the tone and message of the creative. Finally, business messaging remains a significant opportunity for us. We're seeing strong growth across our portfolio of
By the way,
solutions, including with
if
click-to-WhatsApp
anyone
ads,
hates,
which grew revenue 60% year-over-year in Q3. We're also
like
making
watching
good
on
progress
X,
on our business AI efforts,
I am
where we've
streaming
been
on
focused on building a
Twitch
turnkey
now.
AI that helps
I just sent the
businesses
link in the
generate
chat. I don't know
leads
if Twitch
and
is a
drive
better
sales.
viewing experience.
We've been
Yeah,
opening
earnings are
access in
usually 1
recent
hour.
months to more businesses within our
So
initial
this should
test
end at
markets, the
5
Philippines and Mexico, and
5:30.
have seen strong usage with millions of conversations between people and business
But I just
AIs
sent a
taking
link
place
for
since July.
Twitch if you guys like Twitch more.
This month, we expanded availability within WhatsApp and Messenger to all eligible businesses in Mexico and the Philippines, respectively. In the US, we're also starting to roll out the ability for merchants to add their business AIs to their website so we can support the full sale funnel from ad to purchase. Next, I would like to discuss our approach to capital allocation. Our primary focus is deploying capital to support the company's highest order priorities,
Capital
including
allocation.
developing
Are
leading
these things
AI
taped?
products, models,
And is this a
business
real
solutions.
human talking?
As we make significant
Um,
investments in infrastructure to support this work, we are focused on preserving
I
maximum long-term flexibility
sometimes
to ensure we can meet our
these parts
future
of the earnings
capacity
calls are
needs
taped,
while
actually.
also being able to respond to how
At
the
least
market
at my
develops
former
in the
public
years
company
ahead.
I worked at, they
We're
used to
doing so in
tape
several ways,
earnings presentations, but
including
then obviously
staging
the
data
Q&A
center sites
part.
so we can spring up capacity quickly
But
in
I don't
future
know.
years as we need it, as well as
I think
establishing
sometimes they do
strategic
tape them, but
partnerships
obviously
that
the
give us
Q&A
option
section you
value
can't
for
tape.
future compute needs.
Yeah,
The
yeah,
strong
I think they
financial
are.
position and
Varun's
cash
chiming in too. I
generation of
think
our
they are
business
taped.
enable us to make these investments while also accessing additional pools of cost-efficient
Is
capital.
anything not AI now? Maybe this is just AI.
Moving to our financial outlook, we expect fourth quarter 2025 total revenue to be in the range of $56 to $59 billion. Our guidance assumes foreign currency is an approximately 1% tailwind to year-over-year total revenue
Foreign
growth
currency.
based
Talk
on
about
current
China.
exchange rates. Our outlook reflects an expectation for continued strong ad
Yeah,
revenue
she is
growth,
such a good speaker.
partially offset by
That's
lower
probably
year-over-year
only reason they
Reality
hired
Labs
her.
revenue in Q4. The anticipated reduction in Reality Labs revenue is due to us lapping the introduction of Quest 3S in Q4 of last year, as well as retail partners procuring Quest headsets during Q3 of this year to prepare for the holiday season,
Maybe
which were
Mark is
recorded
just
as
AI,
revenue
Mark
in the
Zuckerberg.
third quarter.
He might not be a real person.
Turning to the expense and CapEx outlooks, I'll first start with 2025 before providing some commentary on our planning for 2026.
This is probably just VO3.
We expect full year 2025 total expenses to be in the range of
John, this
to
is Meta.
$118 billion.
We skipped Starbucks. I mean, we
updated
watched the
from our
beginning of
prior
Starbucks,
outlook
but
of 114
we're looking really good on
to
Starbucks.
$118 billion, and
They got
reflecting
through
a
opening
growth
remarks
rate
without
of
saying pumpkin
22 to
spice. Knock on wood,
24%
but
year over year.
this is Meta.
We currently expect 2025 capital expenditures, including principal payments on finance leases, to be in the range of $70 to $72 billion, increased from our prior outlook of $66 to $72 billion. On to tax. Absent any changes to our tax landscape, we expect our fourth quarter 2025 tax rate to be 12 to 15%. Turning now to 2026. We are at an exciting point for our company, where we have continued runway to improve our core services today, as well as the opportunity to build new AI-powered experiences and services that will transform how people engage with our products in the future. We expect the set of investments
They're
we're
already
making
talking
within
about
our
AI.
ads and organic engagement initiatives next year will enable us to continue to deliver
Yeah,
strong
Starbucks
revenue
should
growth
end
in 2026.
5:15.
While our progress on AI models and products will position us to capitalize on new
Looks
revenue
like we have to wait.
opportunities
We have
in
to
the
hope
years to
on
come.
Q&A for China.
A central requirement to realizing these opportunities is infrastructure capacity. As we have begun to plan for next year, it's become clear that our compute needs have continued to expand meaningfully, including versus our own expectations last quarter. We are still working through our capacity plans for next year, but we expect to invest
go,
aggressively
China.
to meet these needs, both by building our own infrastructure and contracting with third-party cloud providers. We anticipate this will provide further upward pressure on our
Do I use
CapEx and expense
MLQ
plans
AI?
next year.
No, I use a
As a
different
result,
tool.
our current expectation is that CapEx dollar growth
pay
will be
like
notably
$200
larger
a
in
month for it,
2026 than 2025.
I don't think the creator
We also anticipate
wants
total
it
expenses
public yet,
will
or,
grow
like,
at a
I don't
significantly
think
faster percentage rate
adding new
in
people,
2026
so.
than 2025, with growth primarily driven
Yeah,
by
China
infrastructure
probably is tough if
costs,
we rely on Q&A.
including
Maybe we're cooked on
incremental cloud
China.
expenses and depreciation. Employee compensation costs will be the second largest contributor to growth, as we recognize a full year of compensation for employees hired throughout 2025, particularly AI talent, and add technical talent in priority areas. Finally, we continue to monitor active legal and regulatory matters, including the increasing headwinds in the EU and the US
Oh,
that could significantly
just EU,
impact our
US?
business and financial results.
mention other.
For example, in the
Oh,
EU,
it's
we
just gonna
continue
be
to
EU
engage
and US?
constructively with the European Commission
Are they going to talk
on our
more?
less personalized ads offering. However, we cannot rule out the Commission imposing
What's
further
up, Sense?
changes to that
Semper?
offering, that
Okay,
could
they
have a
mentioned
significant
EU.
negative impact on our
Could they
European
talk
revenue
about China?
as
I mean,
early as
China's
this quarter.
they get some
In
ad
the
revenue.
US, a number of youth-related trials are scheduled for
Clay is heavy on
2026
carne asada.
and may
Yes,
ultimately
he's been
result
calling
in a
that for
material loss.
months. I was back. I
In
remember tuning
closing,
into their
this
stream
was
months
another
ago.
good quarter for our business. We have an exciting set of opportunities to continue improving our core business while delivering innovative new experiences and services for the people and
Talk
businesses
about a whole
using
lot
our
of
products
nothing.
in the
What they're
years to come.
saying. I mean, this really does feel
With
like
that,
AI
Krista, let's
slop.
open
I
up
don't
the
know
call
what
for
they're
questions.
talking about.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star 1 on your touch-tone phone. To withdraw your question, again, press star 1. Please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please
Yeah,
mute
we
your
may be
computer
cooked on
speakers.
China.
And your first question comes from the line of Brian Nowak with Morgan Stanley. Please go ahead.
Thanks for taking my questions. I have two for Susan. The first one, Susan, so the pipeline for core improvements to come in 26 with models and ad ranking models and more types
Two
of
earnings
compute
calls
seems
simultaneously.
very
That's what I was
exciting, and
joking about.
the infrastructure
I
bill
could have them
seems
all
sizable
playing
behind
right
that.
now.
So can you help us a little understand some of the early
Emoji,
quantifiable signals you're seeing on A/B tests from some of these improvements to come that sort of make you most excited and give you confidence you're going
That's
to
a
get
cool
ROIC
tool, John
from
Chung.
all
I
this
have one that
CapEx?
already like
That's the first one.
consolidates it simple.
Second
for
one's
me.
a little faster.
Um,
How large is the Reality Labs revenue headwind in the 4Q guidance? Thanks.
Thanks, Brian, for the question. I think your first question had a couple parts to it, so I'm going to try to disaggregate those parts and let
Wow,
me know
no
if this
peppermint at
addresses what you're
13 cents?
getting to. I will say that the growth in 2026 capex relative to 2025 comes from growth in each of the core areas, MSL,
It's still not
core
been said.
AI, as well as non-AI spend. So all of those areas are growing, but
How is peppermint?
the
No,
MSL
still
AI
this.
needs are growing the most.
Did it get said somehow? I'm so confused.
In terms of the core
would it be
AI
this cheap?
pipeline,
It's
I
not
think
in
we
the
talked about
transcript.
last year when we were going into the 2025 budget process. We had a roadmap of
I can't
resource
see it,
investments
but
across both
why would there be this
headcount
many
and
shares?
compute
It's kind of
that we
sus.
thought would pay off, in 2026.
I don't
And
know.
it's
Something's
really
up
a
on
very
peppermint.
broad range of sort of different ads ranking and performance efforts.
Just a
And
screwy
we're
order book.
continuing to see that, those have paid off through the course of the year. There is a long list of specific efforts, but one of the measures that we look at to monitor this is how are we driving ad performance? How are conversions growing?
What's interesting is
Conversions
this is
is a
definitely
complex
not
metric for us
recorded, but she
because
sounds the same. She's just like a
advertisers
great
optimize for
speaker.
so many different conversions
Like, listen to her go.
with different
She's a pro.
values. But when
wish
we
I could talk
control
like
for
that.
that and look at value-weighted conversion rates, we're seeing very strong year-over-year growth, and weighted conversions continue to grow faster than impressions. We also talked about some of the new model architecture over the course of the year and the degree to which the new model architecture is enabling us also to take advantage of having more data and
enough
more
about these
compute
AI
to drive ads
models.
performance. So we expect that's going to be a continued story in 2026. We are, in fact, at the beginning of our 2026 budgeting process now, and we, see a similar list of revenue investments that we're excited to be able to invest in. And so we think that that's going to be a big part of our ability to continue to drive strong revenue performance throughout the year. On your second question, which is the Reality Labs revenue headwind, I don't think we have quantified the exact size of that. We expect that Q4 Reality Labs revenue will be lower than last year for a
Reality
couple reasons that
Labs.
I alluded to. The biggest factor is we're lapping the introduction of Quest 3S in Q4 of last year, and we don't have a new headset in the market
Varun
this year.
says he thinks
We
she
also
said
recorded
peppermint.
all of our holiday-related
I don't
Quest
think the order book
3S
would look like
sales
that if she
in
didn't
Q4
already say
24
peppermint. I don't know.
since the headset was launched in
It's
October
weird.
24. This year, we're recognizing some of those Quest 3S sales in Q3
Yeah,
as
there's
retail
no
partners
way
have
it would look
procured
like
Quest
this.
headsets in advance of
But
the
how
holiday
come
season.
the transcript went?
Deal
We're
with
still
it.
expecting significant year-over-year growth in AI glasses revenue in Q4 as we benefit from strong
Maybe it just-
demand for
maybe it just didn't
the
get
recent
picked up
products
in
that
the
we've introduced,
AI
but that
thing?
is
I
more
don't
than
know.
offset by the headwinds to the Quest headsets.
Your next question comes from the line of Doug Anmuth with JP Morgan. Please
Come
go
on,
ahead.
Doug. Ask about China.
Great. Thanks for taking the question. I appreciate the strategy to front load capacity for superintelligence. Can you just talk about your thought process in kind of triangulating the CapEx dollar growth and the significantly faster expense growth next
She
year
probably
with
said in
core growth
transcript
in the
missed it
business
somehow,
and
I don't
then
know.
the impact on earnings and free cash flow? And do you have targets that we should be thinking about for cash on hand or net cash overall? Thanks.
This is not a question that's going to bring up China.
Thanks, Doug.
No, thank
We're
you, Doug. I'm not
right
happy
now,
with
I
that
would say,
question.
in the process of we're relatively early, actually, still in the process.
Now she
of
sounds more
putting
human.
together our budget for 2026. And it is on the capacity side
do I
a
not miss putting
particularly
together budgets? I
dynamic
was heavily
process. We're
involved in
certainly
that in
seeing
my old job.
that we wish we had
Such a
more
pain in the
capacity
ass. You
today
have to
than
go
we
to
do. We
go
would
to
be able to put
leadership
it
on
towards
all
good
of it.
use.
It's like
Not only
I
with
do
the
not
MSL
recommend
team appreciate
together
having more
budgets.
capacity, but we'd be able to put it towards good and ROI positive use in the core business as well. So we're really trying to plan ahead, not only to ensure that we have the capacity we need in 2026, but
winded,
also to
yeah.
give ourselves the sort of
She's running on
flexibility and
empty.
option value to have the capacity that we think we could need in 27 and 28. So that said, there are
Employment
lots
jump
of
scare?
moving pieces in the
Yeah,
budget. It's not
exactly.
baked yet. It's still
Don't
sort of
miss
in the
that.
process of coming together. We don't have, specific targets to share, but we do feel like, our strategic priority is
I
really
used to have
making
a lot
sure
of
that we
2
have
a.m. nights working
the
on
compute that we
budgets.
need to be well
What's going on,
positioned to
Jared?
succeed at AI. And, that's sort of
I
the
don't know. I don't
foremost
think we're gonna
priority
see
as we're putting
China
together the budget.
in this part of it.
Yeah, I mean,
You know,
I'll
in the
add
Q&A,
a
they
few
got to
thoughts
ask a
on this
very
too,
direct
although,
question.
I mean, as Susan said, we're still working through the actual budget, and I think we'll typically have more to share on that early next year. But to date,
And this is
we
Mark
keep
talking.
on seeing this pattern where we build
Come on, Mark. Talk
some
about
amount of
China.
infrastructure to what we think is an aggressive assumption, and then we keep on having more demand to be able to use more compute, especially in the core business, in ways that we think would be quite profitable, than we end up having compute for. So I think that suggests that
Wait,
being
Carne
able to
Asada
make
just
a
hit?
significantly larger investment here
Oh no, you're just
is
memeing.
very likely to be a profitable
Bunch you,
thing
Billy.
over,
I think Carne
over some
Asada
period,
is preordained to be
because
yes.
if
After
the
that
primary
stream,
use of it is going to
went
be to
so far
accelerate
back.
the AI research and the new AI work that we're doing and how that relates to both the core business and new products. But any
kind of
compute that we
preordained.
don't need for that, we feel pretty good that we're going to
Zuck
be able to
is
absorb a
absorbing
very
all the
large amount
compute.
of that to just convert
It all goes to
um,
him.
into more intelligence and better recommendations in
Bunch
our
you, I'm
family
waiting
of
for
apps and ads
Costco
in a
earnings again so we
profitable
can
way.
run back hot dog.
Now, I mean, it's of course possible to overshoot that, right? And if we do, I mean, this is what I mentioned in my comments, then, we see that there's just a lot of demand for other new things that would build internally,
China
externally,
is
like almost
not
every
looking
week.
good.
People
I
come
wish
to us from
Trump could
outside the
come
company
on.
asking us to stand up an API service
Start
or
ripping the China
asking if we have
mentions.
different compute that they could get from us. And we haven't done that yet, but obviously if you got to a point where you overbuilt, you could have that as an option. And then, the kind of the very worst case would be that we effectively have just pre-built for a couple of years, in which case, of course, there would be some loss and depreciation, but we'd grow into that and use it over time. So my view on this is that rather than continuing to be constrained on CapEx and feeling in the core business like we have significant investments that we could make that we're not able to make that would be profitable, that the right thing to do is to try to accelerate this to make sure that we have the compute that we need, both for the AI research and new things that we're doing, and to try to get to a different state on our compute stance on the core business. So that's kind of how I'm thinking about that overall. Of course, there's a lot of
Zuck,
operational constraints too
you're
on
really
what
not
one can
gonna
build,
talk about
right?
China.
So we're basically trying to work through this all, and I think we'll have more to share in the coming months and over the course of next year. But But I think that there's just a huge amount of opportunities ahead here.
Your next question comes from the line of Eric
Come on, ask about
Sheridan
China.
with Goldman Sachs. Please go ahead.
Thanks so much for taking the question. Mark, wanted to reflect on some of your comments with respect to scaling towards superintelligence and bringing it back to consumer AI. Maybe reflect a little bit on the signals you've gotten on the way consumers
AI, could they
across
talk
family of
about like
apps
Quen
interact with Meta
or
AI
like
today,
DeepSeek,
and how you think about
Alibaba?
scaling and exiting models from the superintelligence effort might change the
How long does
utility
one
and
get in the Q&A
behavior around
panel?
Meta AI in the years ahead. Thanks.
Usually for Q&A, it's only
Yeah, I mean,
equity analysts.
a lot of
at,
people
like, top
use Meta AI
investment
today. I mean, as I
banks.
said in my comments up front, there's
So,
more than a
a
billion
few
people
analysts
who
will follow
use it on a monthly
companies.
basis.
We
And
used to
what we
have
see
like
is that
calls with
as we
analysts
improve
at
the
my
quality
old
of the
company.
model, primarily
But
for
a few companies will
post-training
follow will
Llama 4
write
at this point,
equity
we
research
are,
reports on
we
public
continue
companies.
to see improvements in usage.
And that's who's going to ask the
so
questions on
our
earnings
view
calls. So
is
not
that
the
when
general
we get,
public.
the new models that we're building in MSL in there and get like truly frontier models with novel
In which
capabilities
case, the
that
amount
you
of money you
don't
make
have
is
in other
multiple
places,
X
then
larger.
I think that this is just a
mainstream
massive
markets. Actually,
latent
like
opportunity.
equity
right?
research
We
analysts
know,
who would be the people
I
asking
mean,
the
I would guess
questions.
that
They don't make.
Meta,
I mean, they
think
make
has
a
the
lot,
best
but they
track
don't make
record of any
nearly as
company
much
out there
as
of
like
taking a new
actual
product that people
investment
love
bankers
and getting it to
or like
billions of people in terms
sales
of
and trading.
usage.
Closing
So
remarks for Starbucks.
I think that the ability to plug
Should I
in
swap over?
leading models is going to, I would predict, lead to a very large amount of use of these things over the coming years.
We're gonna swap really quick to
China business is
Starbucks.
back to growth. And you know what? We're seeing tremendous
'Cause it's right
opportunities
towards
for
the
growth
end.
around the globe.
I
Second,
want to see if I can scoop up
I do
any
want
no
to point out,
shares.
because this is kind of to David Palmer's initial question, back to Starbucks is not a slogan.
I know, right? When I turned
is-
to it, Starbucks
it's,
said
it's an
China.
enduring model
They're
for
preordaining
growth that frankly is
they're gonna
centered on
say this for
customers,
Meta.
and it's going to be driven by our partners in our
Let's
stores,
see.
and it's for every access mode that people want to experience Starbucks. And it really is getting us back to what we do best, which is exceptional craft, genuine connection, and welcoming
Ugh,
community
not
coffee
checking
houses.
these.
And third, I think on our fourth quarter results,
Okay, never
it
mind.
gives
I'm
us
not going to pick
confidence
up no
that we
shares
really
on
have
any
turned
of
the
these. These are
page
very
to a new chapter
sus.
in
I'm
our
going back to
turnaround.
Meta.
You know,
shown there's sort of this very large amount of headroom, and the opportunity there keeps growing as we are improving and optimizing the AI there. And I think that really shows no sign of being near the end.
You bought
I think
loyalty
that
no
there's
on Starbucks.
quite a
Did
bit
that
more to
hold?
do there. And like I said in response to the last question, we are sort of perennially operating the family of apps and ads business in a compute starved state at this point, which is on the one hand sort of an odd thing to say given the compute that we've built up, but we really are taking a lot of the resources and using them to advance future things that we're doing, and we think that there's a lot more compute that we could put towards these that would just unlock a huge amount of opportunity in the core business as well.
Your next question comes from the line of Mark Shmulik
Someone
with Bernstein.
please talk
Please
about
go
China.
ahead.
Yes, hi. Thanks for taking the questions. Susan, as you think about the visibility into kind of the runway next year of continued ad performance and engagement improvements, how do you think about kind of the scale of those improvements versus kind of the progress we've seen over the last 2 years? And then, Mark, as you think about kind of the timing of some of these newer efforts coming out of Superintelligence Labs, is us anchoring to kind of an updated frontier model launch sometime next year like the right way for us to think about it, or
That's
should we be
cool. They're
looking
talking
at
about
kind of progress
LLMs.
from new products you're
This,
excited to
this
see
could
ship
impact
like
the
by?
AI model
Thank you.
markets, honestly. I'm curious what they have to say.
Thanks, Mark. So on the sort of ads improvement side, some of the innovations
Yeah, I'm
that we have
exiting out of
been
Starbucks.
launching actually, involve
But guys, we
sort of
cooked
improving
on
our
Starbucks, by the
larger
way.
scale models. So
650, by the way.
we,
Let's
don't use
go.
our larger model architectures like
Let's see.
for inference because
Yeah,
their size and
650.
complexity would make it too cost
All we need
prohibitive.
is China
The
on
way
Meta.
that we drive performance from those models is by using them to transfer knowledge
Don't
to
think we'll
smaller,
see it,
lightweight
though.
models that are used at runtime. And then in addition to the foundation model work, we are working on advancing our inference models by developing new techniques and architectures that then allow us to scale up compute and complexity in an ROI positive way. So in general, we obviously have a very large base of, advertisers. There's a lot of demand liquidity in the system. And even, small scale improvements that we are able to make in terms of driving, basis point improvements in the performance of ads or single digit, increases in conversions relative to impressions in a given quarter, off of a large base mean that we're really able to continue to grow the absolute dollars of revenue growth in a pretty meaningful way.
I don't know about China. I don't know about it. Not feeling good.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Actually,
Thank you.
hey, Justin, just give us 1 second. I think there was a second
Sure.
Mark's question that we just want to get to on MSL.
Yeah, I mean, I'll keep it quick. I mean, I don't think we have any specific timing to announce, certainly on the models or products, but I expect that you will see both. We expect to
Go,
build
Dustin.
novel models
Were you big
and
on
novel
no
products,
pumpkin
and
spice?
I'm excited to share
I
more when
printed
we
on
have
that, but if I can't get China here, some of my gains will be lost. I'll probably lose
Krista,
300 on this
please go
mention.
ahead.
No China.
Great, thanks. Mark, you mentioned the prior 2 content cycles, and obviously you've been able to generate very attractive margins on them. As we get into the AI cycle, obviously some concerns on the investment, but can you talk a little bit about how you're thinking about, tools that could be coming out for users? I know there's some new competition. And then secondly, how you think about margins in this content cycle? Any reason to think they would be different versus prior cycles? Thank you.
I think it's too
Canada,
early
yes.
to
Comparable
really
sales,
understand
no. Pumpkin spice, no. Loyalty,
are
no.
going to be for the
Heck yeah.
new products
Print.
that we build.
Comparable
I think
sales is like
certainly
30
every
cents too.
each
probably
product has
cleaned
somewhat different
up.
characteristics, and I think
Let's go,
we'll kind of
Jared
understand
cleaned
how
up
that
too.
goes over time.
Hell yeah. See?
I
We're
mean, my
making back
general
Powell
goal is
on the
to
earnings
build
today.
a business that maximizes value for the people who use our
Mark's not
products
gonna
and
talk about
maximizes profitability, not margin. So I think we'll kind of just try to build the best things that we can and try to deliver the most value that we can for most people.
Your next question comes from the line of Ross
Come
Sandler
on, Ross.
with Barclays.
Barclays.
Please go ahead.
They're an international bank.
Great. Hey, Mark, some of the goals for competing AI labs are around
Competing AI
achieving
labs.
AGI or these other
This
milestones
could be
that are kind of like
OpenAI, blah,
out
blah,
there and a
blah.
little esoteric.
Maybe he could bring up
how are you
DeepSeek,
setting
Quen,
up your
Alibaba,
new team
China.
in terms of achieving those types
Yeah,
of goals
good call on no
versus
pumpkin spice, Jared.
products
I was
that
heavy
can
on that. That was
generate
my biggest
revenue from
play.
Meta kind of right out of the gate? And is the goal that you had articulated to us previously around giving, billions of people kind of a personal AI to use, still the direction of travel that you see, or is there
Let's go DeepSeek. Let's
other
go,
things
Jeff.
like kind of this Vibes or Sora
They could say
angle
DeepSeek,
that
and
you think are
that's how they could do
potentially important?
the
How
China
should we think
mention.
about like the overall direction? Thank you.
Sure. So the way that I think about this is that the research is
But he's
going
probably gonna
to
focus
enable
on, like,
new
OpenAI and Google's
technological
competition.
capabilities to exist. And then those capabilities can get built into all kinds of different products. So the ability to reason more intelligently is, for example, very important across a large number of things. It would be useful for an assistant. It will also be useful in business AI. It will also be useful in the AI agent that we're building to help advertisers figure out what their campaigns are going to be.
agent for
It
advertisers.
will
I
also
freaking
have
love AI.
implications for
I use it for all my
eventually
tweets and
how we
stuff.
do ranking and recommendations of people's feeds and
I'm so-
and make
I'm
different
excited
decisions
for AI
there.
to continue to grow.
That's
to
just
be
one
honest.
example.
I know
I mean,
everybody's
certainly
super
the
doomer on it,
capability
but I
to
freaking
be able to
love
produce
AI.
very high quality good video is going to be useful for giving people new creative tools. It will help increase the amount of content inventory that can be shown in Instagram and Facebook, and therefore should enable an increase in engagement there. It should help advertisers be able to create creative that will help us monetize better. So
China's
you can
coach,
just
guys.
go kind
It's
of
not looking good.
down the list of capabilities that you'd expect. And I think each one will enable a bunch of different things. And I think the art of product development here is looking at the list of technology capabilities and figuring out what new products are going to be useful and prioritizing those.
JD Vance speech at Ole
But
Miss. What time is that, Jared?
fundamentally, I would sort of expect this exponential curve in new technology capabilities that are going to become available. And the other thing that I expect is that I think being the best in a given area will drive great returns rather than, this is not like a check the box exercise of like, okay, we can generate some kind of content and someone else can. I think that like the company that is the best at each of these capabilities, I think will get a large amount of the potential value for doing that. So there are lots of different capabilities to build. I'm not sure that any one company is going to be the best at all of them. I doubt that's going to be the case. But a lot of what we're trying to do is not kind of do some things that others have done. We're really trying to build novel capabilities. And I'm keeping this high level because I don't want to necessarily from a competitive or strategic perspective get into what we're prioritizing. But that hopefully gives you a sense of how we're thinking about what we're doing. We want to be able to kind of build novel things.
I feel like nothing's
build
happened
them into a lot of our products
for a long time,
and then have the compute to scale them to
posted about
billions.
it a while ago, but like back in March,
and we think that that's going to both
everyone was so bullish because there was a new top AI model every freaking week,
and new businesses,
but
and
just
very
been nothing
significant
for like 6
improvements to
months.
the current business.
Meta got late in the game, super late, compared to Google, compared to
Your next
OpenAI,
question comes
but
from
they've
the
been
line of
poaching a
Mark
ton of top
Mahoney
talent for the
with
last few
Evercore
months.
ISI.
Everybody's waiting for
Please go
Meta to
ahead.
drop like a legit model.
Thanks. Could I just ask just a question on Meta AI and both product and a monetization
Be interesting if they
path?
actually
So
drop a good
when you
model.
look at it, what you've seen that's most encouraging to you in terms of the adoption and
There's a
the use
loser in this
of
bubble, it's most
Meta
likely
AI,
Meta.
and then
I don't know.
when
I
you
never
think about,
doubt
I know
Mark.
you
I really
generally
do
like
think
to
Mark
roll
is a
out
huge
and then,
visionary.
deepen engagement, and then later think about monetization.
But I guess whatever
Where do you
happened
think you are on
to
that path now? Is it clear to you what the monetization
the whole
options
like
are
metaverse?
for Meta
Like, is
AI?
that still a
Thank you very
thing?
much.
What the hell is that? They pivot the whole company? I don't know what's come of it.
I mean, I think the most promising thing that we're seeing is one, that we were able to build something that a large number of people use, and I think that that's valuable. And then secondly, that there is a clear
It's in 40
correlation
minutes,
as we
Jared?
improve
Yeah.
the models
JD
in
will
ways
probably
that we
be
think
super
make them
late,
better,
so probably
that
like
people
2
use them more.
hours.
So that shows that we
He's
have
always really late.
a runway to basically be able to improve engagement and turn this into a product that's leading over time. In terms of where we are on this, and we basically just did this huge effort to boot up Meta Superintelligence Labs and build what I am very proud of is I think the highest talent density lab in the industry at this point. There are a lot of really great researchers and infrastructure folks and data folks who are now a part of this effort, who are focused on training the next generation of work and doing some really novel work. And when that is ready, I think that we will be able to plug that into a number of the products that we're building, and I think that will be very exciting. But I think that that's really the next thing that we're looking at. And then from there, I think that these models will also improve monetization in all of the different ways that we've talked about so far in terms of improving engagement.
9 minutes left. I don't think we're going to see China.
Advertising, helping advertisers engage.
But
I mean,
let's see if we can make it
one
back on
opportunity
the other
that
mentions.
we usually talk about on these calls, but hasn't
No China hit. I think we'll be down to like
the ability to make it so that advertisers
what is this? Okay.
Are
I only
increasingly
want
just going to be able to give
share.
us a business objective and give
good
us
on
a
VR,
credit card
good
or
on
bank
channel.
account and like have the AI system basically figure out everything.
So I
else
guess we'll
that's
be down like
necessary,
300
including
on
generating
Meta. I don't know.
video
not that bad.
or different types of creative that might resonate with different people that
But
are
we made
personalized in different ways.
650
Finding
on
who
the
the right
earlier one, so
customers
we're
are.
up 350
All of these,
so far.
all of the capabilities that we're building, I think, go towards improving all of these different things. So I'm quite optimistic about that.
Your next question comes from the line of
Unless
Ronald
somebody's going to
Josie
throw
with
in
Citi.
a
Please
Hail
go ahead.
Mary China question.
Great, thanks for taking the question, and this maybe dovetails perfectly off of Mark,
There's
what
not
you just talked
enough
about. And,
liquidity.
you know, we heard a lot about
I'm
end-to-end
sorry,
automation
Polly
here,
Molly
I think
smokes.
reaching a $60 billion ARR. Wanted to hear about, if you can talk to us more just about adoption rates amongst the advertisers,
Man, they're
and then
not-
maybe bigger
well,
picture.
Okay,
as
if they're
you
talking about
incorporate
advertisers,
ranking
they do have
recommendation
China
changes like
advertisers.
Andromeda
Maybe
or
that's
GEMS
where
or
this could
Lattice.
come up.
Just talk to us how this automation is driving, call it a higher ROI for advertisers overall as we bring it all together.
Could they talk about
Thank you.
advertisers in China?
Yeah, so we've been
Could
sort
they
of
Hail
laying
Mary
the continued
I don't think so.
brick
but-
by brick build of
Brick by brick. I love that
of
phrase. I gotta
Advantage
use that
Plus
more.
and extending
I gotta
the
use
set of
brick by
objectives
brick
that it
more.
applies to over time. And so in Q3, we completed the global rollout of the streamlined campaign
Global?
creation flow for
Global? Could
Advantage
they talk
Plus
about
lead
China?
campaigns. So now advertisers who are running sales app or lead campaigns have end-to-end automation turned on from the beginning.
This might be bullish
and
for
like,
China.
the kind of application of the streamlined campaign creation flow for other objectives, this generally allows advertisers to optimize and automate several aspects of the campaign setup process at once. That includes things like audience selection, where to show the ad, how the budget gets paced and distributed across ad sets to drive the most efficient outcomes.
Just going back to the budget. Come on.
And, we see that Advantage Plus continues to drive performance gains. Advertisers who run lead campaigns using Advantage Plus are seeing a 14% lower cost per lead on average than those who are not. And I would say that we think that there is still a lot of opportunity generally to grow adoption of Advantage Plus. A lot of advertisers only use our end-to-end automated solutions for a portion of their campaigns, so we can grow share there. And to capture that opportunity, we're focused on driving continued performance improvements and addressing some of the key use cases that we still need in order to grow adoption. We're also working to broaden adoption among advertisers who use one of our single-step automated solutions.
For
example, advertisers who might only use a piece of it, like Advantage Plus Audiences, by helping them understand the benefits of using more than one automated solution at the same time. So I would say Advantage Plus is sort of an ongoing platform by which we both continue to expand the feature set that is available in Advantage Plus, and then expand the extensibility or the coverage of that feature set to the sort of the broader set of advertisers. I think Mark mentioned that the annual revenue run rate now for advertisers who are using these automated options is $60 billion. And again, we see that there's room to continue growing that.
Your next question comes from the line of Youssef Squali with Truist Securities. Please go ahead.
Great, thank you very much. Mark, on wearables in particular, do you think you'll be able to sell enough hardware to recoup your investment, or is that dependent on maybe creating new avenues for revenue from things like advertising services and commerce through that new computing platform? And if so, what are kind of the gating factors there? And then Susan, how do you see the on-balance sheet versus off-balance sheet financing of your AI initiatives? You've recently struck
this is not a China question.
For the Louisiana data center. Is that part of the CapEx guide for 26? And if it's not, how significant will that way of funding be for Meta going forward? And basically, would that slow down your CapEx growth past 2026? Thank you.
I can talk about wearables, and then Susan can jump in on the other part. So I think that there are a few pieces here. One is that the work that on Ray-Ban Meta and the Oakley Meta products is going very well. I think, at some point, if these continue going as well as it has been, then I think it will be a very profitable investment. I think that there's some revenue that we get from basically selling the devices. And then some that will come from additional services and from the AI on top of it. So I think that there's a big opportunity. Certainly, the investment here is not just to kind of build just the device. It's also to build these services on top. Right now, a lot of people get the devices for a range of things that don't even include the AI, even though they like the AI. But I think over time, the AI is going to become the main thing that people are using them for. And I think that that's going to end up having a big business opportunity by itself. But as products like the Ray-Ban Meta and Oakley Metas are growing, we're also going to keep on investing in things like the more full field of view product form of the Orion prototype that we showed last year. So those things are obviously earlier in their curve towards getting to being a sustaining business. And our general view is that we want to build these out to reach many hundreds of millions or billions of people, and that's the point at which we think that this is going to be just an extremely profitable business.
I don't know if there's any more.
Youssef, to your second question, so the JV that we announced with Blue Owl is sort of an example of finding a solution that enabled us to partner with external capital providers to co-develop data centers in a way that gives us long-term optionality in supporting our future capacity needs, just given both, the magnitude, but also uncertainty of what the capacity outlook in future years
I don't think
looks
this
like.
is worth a China angle.
In terms of how that is recognized as
Yeah, I haven't
CapEx,
looked
our
into the
prior
Meta
CapEx
glasses,
reflected a
Semper. I wanna
portion
look
of
into them. I've heard
the
a lot
data
of good
center
things
build
about 'em.
cost prior to the joint venture being established. Going forward, the construction costs of the data center will not be recorded in CapEx. As the data center is constructed, we will contribute 20% of the remaining construction costs required, which is in line with our ownership stake, and those will be recorded as other investing cash flows.
Your last question comes from the line of Ken Gawrelski with Wells Fargo. Please
Come on,
go
Wells
ahead.
Fargo. Ask about China.
Thank you. Just one from me, please. Mark, as you think about with hopefully a leading frontier model next year in hand, could you talk about where you think the value will accrue in this evolving ecosystem? Will it be with the platforms, or do you think that this will be mostly the value will accrue to the scaled first-party applications? Thank you.
Okay,
I
this
guess
is
I'm not
a
exactly
China
sure what you
question.
mean by platform versus application in this context, but I mean, I think
Come on,
that
Mark.
I mean, I think
Do
there's
it for
just a
me.
lot of value to create with AI overall. So I mean, clearly you're seeing the people who are making the
All right, I gotta
hardware.
get the next earnings
I mean,
ready.
NVIDIA's doing an amazing job, right?
What
I
do-
think
what do I
extremely
have
well-deserved success. The cloud partners and companies are doing very well. I think that will likely
We have
continue. I
Google
think there's a
and
huge opportunity
Microsoft.
there. And but if you look at it today,
All right, I'm way more
the
jacked on Google. So
the
we're going
companies
Google
that are
next.
building apps, I mean, a lot of the apps are still relatively small. And
Coinbase prediction market when?
And I think that's obviously
I don't
going to be a
know.
huge opportunity.
Is
And I
Coinbase
think
just
what we've
gonna
seen
on
overall
board with
is,
Kalshi, similar to like Robinhood?
is basically
maybe? I don't know.
All
right,
you know,
let me
people
get,
take
Google
like individual technology advances and build them into products that then build either communities or other kinds of network effects, and then end up being very sustaining businesses. And I think what we haven't really seen as much in the history of the technology industry is the rate of new capabilities being introduced, because around each of these capabilities you can build many new products that I think each will turn into interesting businesses. So yeah, so I don't know. I mean, I'm generally pretty
Financial
optimistic
performance may be
about there being a very large opportunity. But in terms
Wow.
of new things to build, I think being
Google's
able
is an
to
actual YouTube video.
to build them and then scale them to billions of people is a huge
Let me get this ready.
muscle that Meta has developed, and I think we do very well. And I certainly think that that's going to deliver a huge amount of value, both in the core business for all the ways that we talked about, how it's going to improve recommendations and the quality of the services, as well as unifying the models together. And so that way, when these systems are deciding what to show, they can just pull from a wider pool.
Google's
And
about
that
to start.
These are things that we've just seen over the 20 plus years of running the company, that they just deliver consistent wins. And we're going to keep on being able to make the systems more general and smarter, and make better recommendations for people,
Okay,
and have a
Google
larger
just
pool of
started with
inventory. And
Sundar. I think Meta's
that
wrapping
is
up
all
right
going to be
now.
great. And then there's going to be a lot of new things that I think we're going to be able to take and scale to billions of people over time, and build new businesses, whether that's advertising or commerce supported, or people paying for it, or different kinds of things. So yeah, it's I think it's pretty early, but I think we're seeing the returns in the core business. That's giving us a lot of confidence that we should be investing a lot more, and we want to make sure that we're not underinvesting.
Okay, wrap it up. Come on.
Great. Thank you, everyone, for joining us today. We look forward to speaking with you again soon.
All right, that's it for. Okay, no China hit. Whatever, we'll take the L. I think I lost $300 on Metas, but we're up.
The Gemini app now has over 650 million monthly
On the
active
earlier
users,
mentioned-
and queries increased by 3x from Q2.
All right, we got
Cloud
Google
had
on
another great quarter of accelerating growth, with AI revenue as a key driver. Cloud backlog grew 46% quarter over quarter to $155 billion.
Turn this down just a touch.
And we crossed 300 million paid subscriptions,
okay
led
there,
by
guys?
growth
Let
in
me know.
Google One and YouTube Premium.
For
Today,
this,
I'll discuss progress in our full stack approach to AI, and then share highlights from Search, Cloud, YouTube, and Waymo. As a reminder, our full stack approach spans AI infrastructure, world-class research, including
on
models and tooling, and our products and
Profitability, no.
platforms that bring
Acquisition,
AI
yes.
to people everywhere.
Wiz, no.
First up, AI
Regulator, no.
infrastructure.
I'm pretty big on this.
Our extensive and reliable infrastructure, which powers all of Google's products, is the foundation of our stack and a key differentiator. We are scaling the most advanced chips in our data centers, including GPUs from our partner NVIDIA, as well as our own purpose-built TPUs. And we are the only company providing a wide range of both. As we announced yesterday at NVIDIA GTC, we are now shipping the new A4X Max instances powered by NVIDIA GB300 to our cloud customers. Our highly sought-after TPU portfolio is led by our 7th generation TPU Ironwood, which will be generally available soon. We are investing in TPU capacity to meet the tremendous demand we are seeing from customers and partners, and we are excited that Anthropic recently shared plans to access up to 1 million TPUs. Next, world-class AI research,
better, right?
including models
I could turn
and
it down
tooling.
even more.
Our models
Let
are
me know.
world-leading. Gemini 2.5 Pro, Veo, Genie 3, and our viral sensation Nano Banana are among the very best in class. Over 230 million videos have been generated with Veo 3.
I'm super bullish on Google.
And more than 13 million
I should have bought
developers
them
have built with our
back when they
generative
had
models.
dipped like 6 months
We are
ago.
looking forward to the release of Gemini 3 later this year. Our research leadership
Okay,
is
I turned it
advancing
down
next
way
frontier
more.
technologies.
This is probably best.
Last week, we announced that our Willow quantum chip achieved a major breakthrough.
Man, I'm
running
looking
an
at those
algorithm
regulator
13,000
no-shares.
times faster than one of the world's best supercomputers.
These are very enticing.
And the
Do
result
they
is
know something I
verifiable,
don't know?
paving the way to future practical applications. Speaking of quantum, let me congratulate Michel Devray, our chief scientist for quantum hardware. He received a Nobel in physics for early research he did in the 1980s. 3 Nobels awarded to current Googlers in 2 years. Incredible. And third, our products and platforms. We are bringing AI to more people and developers than anyone else. In July, we announced that we processed 980 trillion monthly tokens across all our surfaces. We are now processing over 1.3 quadrillion monthly tokens, more than 20x growth in a year. Phenomenal. This quarter, we took big steps to reimagine Chrome as a browser powered by AI through deep integrations with Gemini and AI mode in search, with more agentic capabilities coming soon. In August, at Made by Google, we unveiled our Pixel 10 series of devices. They are the first with our most powerful chip designed to run on Gemini Tensor G5. They are our best reviewed devices ever. And last week, we launched Android XR, our new operating system with Samsung's Galaxy XR device.
Man, these 1,200
It
shares
brings
at
new
67
ways
are
to use
super
headsets
enticing.
and glasses with Gemini at the core. Now turning to highlights from search. AI is driving an expansionary moment for search. As people learn what they can do with our new AI experiences, they're increasingly coming back to search more. Search and its
Do I
AI
do it?
experiences are built to highlight
Do I
the
lock
web,
in on regulator,
sending
regulation,
billions of clicks to
regulatory
sites
no?
every day. During the
Very
Q2 call,
enticing.
we shared that overall
Let me
queries
reopen
and
the
commercial
data.
queries continue to grow year over year. This growth rate increased in Q3, largely driven by our AI investments in search, most notably AI overviews and AI mode. Let me dive into the momentum we are seeing. As we have shared before, AI overviews drive meaningful query growth. This effect was even stronger in Q3 as users continue to learn that Google can answer more of their questions. And it's particularly encouraging to see the effect was more pronounced with younger people. We're also seeing that AI mode is resonating well with users. In the US, we have seen strong and consistent week-over-week growth in usage since launch, and queries doubled over the quarter. Over the last quarter, we rolled out AI mode globally across 40 languages in record time. It now has over 75 million daily active users. And we shipped over 100 improvements to the product in Q3, an incredibly fast pace. Most importantly, AI mode is already driving incremental total
more.
query growth for search.
Regulator,
Philip will talk more
no.
about monetization and share how AI is helping people connect with businesses and shop on search. Next, Google Cloud. Our complete enterprise AI product portfolio is accelerating growth in revenue, operating margins, and backlog. In Q3, customer demand strengthened in 3 ways. One, we are signing new customers faster. The number of new GCP customers increased by nearly 34% year over year.
Do I load up
Two,
more?
we are signing larger deals. We have signed more deals over $1 billion through Q3 this year than we did in the previous 2 years combined. Third, we are deepening our relationships. Over 70% of existing Google Cloud customers use our AI products, including Banco BV, Best Buy, and FairPrice Group. As we scale, we are diversifying revenue. Today, 13 product lines are each at an annual run rate over $1 billion. And we are improving operating margin with highly differentiated products built with our own technology. This deep product differentiation starts with our AI infrastructure. We have a decade of experience building AI accelerators and today offer the widest array of chips. This leadership is winning customers like HCA Healthcare, LG AI Research, and Macquarie Bank. And it's why 9 of the top 10 AI labs choose Google Cloud.
I'll get some more regulator.
We are also the only cloud provider offering our own leading generative AI models, including Gemini, Imagine, Veo, Chirp, and Lyria.
Why does it say Google
Adoption is
earnings calls
rapidly
November 4th?
accelerating. In Q3, revenue from products built on our generative AI models grew more than 200% year over year. Over the past 12 months, nearly 150 Google Cloud customers each processed approximately 1 trillion tokens with our models for a wide range of applications. For example, WPP is creating campaigns with up to 70%
We're pretty jacked here on
efficiency gains.
regulatory regulation.
Swarovski has increased email open rates by 17% and accelerated campaign localization by 10 times. Earlier this month, we launched Gemini Enterprise, the new front door for AI in the workplace, and we are seeing strong adoption for agents built on this platform. Our packaged enterprise agents in Gemini Enterprise are optimized for a variety of domains, are highly differentiated, and offer significant out-of-box value to customers. We have already crossed 2 million subscribers across 700 companies.
Wow.
Next, YouTube. In the living room, YouTube has remained #1 in streaming watch time in
YouTube
the
is
US
hard
for
to
more than 2
figure out,
years.
man. I'm trying to
according
build a
to
YouTube
Nielsen.
channel. It's impossible. My
Last
clips
month
get
marked
nothing.
YouTube's first time as a live NFL broadcaster. This exclusive global broadcast, live from Brazil, drew more than 19 million fans and set a new record for most concurrent viewers of a live stream on YouTube. YouTube Shorts also continues to perform well. In the US, Shorts now earn more revenue per watch hour than traditional in-stream on YouTube. At our Made on YouTube event, we rolled out a number of AI-powered features that are helping creators supercharge creation and build their businesses. AI is now streamlining the entire content creation workflow, from generative video tools and more efficient editing to AI-powered insights that help creators optimize
Hold
their
on,
channels.
no whiz.
We're also using AI
What's
to
up,
expand
Logan?
monetization, automatically identifying products to make their videos more shoppable. Philip will discuss in more detail. And finally, Waymo. Next
Find
year,
terms people
Waymo
search a
aims
lot
to
than
open service in
SEO.
London, and they are working to bring service to
That's what I
Tokyo.
gotta do.
They've also announced expansions to Dallas, Nashville, Denver, and Seattle, and
Have
secured
friends do
permission to
it,
operate
yeah.
fully autonomously at San Jose and San Francisco airports. Autonomous testing continues
I'm just trying to
scale
cross
in New York
post more,
City.
and I know
The new
Twitter. I
Waymo
love
for
Twitter.
Business allows
Twitter's like my
enterprises
shit.
to offer Waymo as a
But
work
like
travel
YouTube,
option.
Instagram, TikTok,
And we
I don't
launched
freaking
Waymo Teens
understand
accounts in
what
Phoenix
works
this
on those
summer.
things. I feel like the
We are
level
pleased
that
to
you
see
need to get
usage steadily
to
increase with
to have good
positive
clips on
feedback
YouTube is
from
so
teens
hard.
and their parents alike. Waymo's growth and momentum are strong, and 2026
he
is
says
shaping
China.
up to be an exciting year.
Exactly.
Overall, a milestone quarter. The
Like,
incredible work
people's
of our
clips
teams
on
is
YouTube
driving
are
momentum
so good.
across the board.
So I feel like the standards
and our
are
leadership
so
in
high.
AI positions us so well for the opportunity ahead. I want to thank all of our partners and our employees for their
You took
hard
profit,
work
Logan?
and
How
an
much
excellent
profit? What did it
Q3.
spike to?
With that, I'll turn it over to Philip.
Thanks, Sundar, and hello, everyone. I'll quickly cover performance for Google Services for the quarter, then structure the rest of my remarks around the great progress we're delivering across search, ads, YouTube, and partnerships. Google Services revenues were $87 billion for the quarter, up 14% year-on-year, driven by accelerated growth in search and YouTube, partially offset by year-on-year decline in network revenues. Adding some further color to our results. The 15% increase in search and other was led by growth across all major verticals, with the largest contributions from retail and financial services. YouTube saw similar performance across
Still
verticals.
no acquisition mentioned.
Its 15% growth in advertising revenues was driven by direct response, followed by brand.
I will buy
Starting
more
with
acquisition
search and other
if they
revenues,
don't
which delivered over 56
say it in the
billion in
beginning.
revenue for the quarter. As Sundar mentioned, AI is driving an expansionary moment and transforming how people use Google Search. Our investments in new AI experiences, such as AI overviews and AI mode, continue to drive growth in overall queries, including commercial queries, creating more opportunities for monetization. These AI experiences are enhancing how people connect with businesses and shop on search. We recently added shopping capabilities in AI mode, which now help
made
people
10K
shop
on that?
conversationally in
Dang.
search. And we
Yeah,
expanded
guys,
try-on capabilities
if you're
to
not
more clothing
tailing
items,
Logan's plays-
now available to anyone in the US. Lastly,
But
we're making
Logan,
it
you gotta
easier
give
for
me these
consumers
picks
to
before
benefit
you
from
come on
deals through
stream. You
new
gotta
loyalty
DM me
offerings
them,
like
and I'll just
personalized
tail them,
annotations
and then
and
I'll
organic results and ads.
go public and act like they
Looking
were
at
my
monetization,
plays. We should
businesses
do
can now
that.
tap
Like you
into our most
message
powerful
me on
AI
Discord
search
what the plays
experiences.
are. I'll
Using
tail
our
them,
most
and then
advanced
I'll
AI
explain
models, we can understand
how I thought
and
about
predict
them.
intent like never before, unlocking entirely new commercial pathways to provide
so funny,
valuable
aren't
new
I?
consumer connections and helping us monetize even more efficiently.
Still no
Rolled
acquisition
out
mentioned.
globally in September, AI Max and Search is already used by hundreds of thousands of advertisers, currently making it the fastest growing AI-powered search ads product. In Q3 alone, AI Max unlocked billions of net new queries. By delivering the most relevant ad across surfaces and matching advertisers
too,
against
please.
additional
Yeah, send it
queries
to
they
Semper
weren't
too.
reaching before, AI Max helps advertisers discover new
Semper has sent me
customers
some
at
good
the
trades.
exact moment they need their product or service.
He's DM'd me them a few times. I need to start
Kayak,
tailing
for example, look to grow conversions while staying within their ROAS goals. After turning on AI Max and Search, they grew the conversion value by 12% in early tests. We continue to infuse generative AI capabilities at every step of the marketing process. We rolled out Imagen 4 in Asset Studio and Product Studio, helping businesses produce more and better creatives. On the measurement front, we enriched the model supporting Meridian, our marketing mix model, with additional variables. And more granular
Feels like I've
reporting
had
in
decent
PMax
variance on
is
my side
making
this
bidding
month.
more
I
effective.
feel like my variance has been just
Financial
like
services
regular.
company SoFi has
I
been
got
using
killed on
PMax
Powell today, lost
to meet its
2,600.
ambitious growth targets and help drive a 39%
But I've also had
improvement
favorable
in its
variance,
conversion volume
so I feel like
year
I'm
over
like
year.
pretty average
Moving
variance.
to YouTube, where we saw accelerated revenue growth,
I mean,
our recommendation
maybe a
systems
little
are
bit
driving
negative,
robust
'cause
watch
some of
time
the
growth
inch
in our key
ones-
monetization areas like Shorts and Living Room. As we leverage Gemini models, we're seeing further discovery improvement.
Like some of the inch
On
no's that I
direct
lost on
response,
were like
we're
very
excited
bad
about the growth
variance.
and revenue we're
I'd
seeing,
be up a
especially
lot
from
more.
small and medium advertisers adopting Demand Gen. We also improved performance on Demand Gen, with over 100 launches helping to increase conversion value by more than 40% for
Wow, still
advertisers
no
using target-based
acquisition
bidding on
mentioned.
YouTube.
I'll put up some
The retail
limit
vertical
buys on
continues to lead our
acquisition.
growth on YouTube, with Demand Gen helping us further monetize shopping-related categories.
Let's see if I get filled.
Looking at the living room,
You
our
weren't
long-term
behind a
bet,
25
more
bips
advertisers are
hike.
adopting interactive direct response ads, leading
I had
to an annual
$10,000
revenue run rate
on the
exceeding
25
$1
bips hike.
billion globally
But
for this
the
format.
Powell speech, I got
For our viewers,
messed up by.
we continue to give fans greater
That's where I
access
lost like
across sports
2,600.
while tapping into the best of YouTube's
I was
product
super big
innovation
on
and creator-led
projection,
content.
media no, just because
Sundar
I
mentioned that
think
we expanded
this
our
speech
NFL
they would talk
partnership
about,
with our first ever exclusive global
projections a lot,
broadcast of an NFL game.
and then he kind of snuck in
Brands
projection
loved
and media
the
in
opportunity,
response to
and we
one
sold
question,
all
which
our ad
killed
inventory
me.
within a couple of weeks. Looking at creators, a significant force behind the thriving YouTube creator economy is
Guys,
the collaboration
if you
between
don't follow
creators and
Logan,
brands.
seriously, follow him.
Tools like
He's very
direct
active in
linking
the
to deals
Kalshi
websites
Discord
and
too.
shorts and swappable brand segments and
but
long form will soon
you
help
were on
creators show
projection?
how they deliver great
How did you
value
think
for
that was
brands.
plus EV though? It's not
Thanks
an
to a
SCP
collaboration
month.
with Dude Perfect,
I'm
Comcast
curious. You should
Xfinity
DM me
drove
your
an
rationale,
8%
'cause
search
I'm
lift,
curious.
beating other Xfinity ads
I mean,
recall
maybe it
lift
did
on
have
Shorts
value
by
at like 30.
34%.
Maybe I just
At the same
overplayed
time, it
with the
decreased the
whole
cost per
summary
lifted
thing.
user by 50% when compared to the next most
Because
efficient
like a
ad.
lot of mentioned sharps were on no projection.
We continue
and
to
no,
invest in
but maybe it
AI-powered
was a bad
features
play in
that are helping
retrospect.
creators
Projection,
supercharge
I could
creation
have
and
seen
build their
hit,
businesses.
but
With VO3
median, I was
integration and
shocked
speech
got
to
hit.
song, creators go from idea to iteration quicker, and new channel insights help them better understand performance. Ending on YouTube with our subscriptions products, we're also seeing momentum with strong growth in offerings such as YouTube Music and Premium and YouTube TV. We're also applying Gemini internally to help us serve customers with increased speed,
5 minutes.
intelligence, and efficiency. Our sales teams use Gemini Enriched with Ads Knowledge to streamline customer interactions. This increased productivity by over 10%, led to hundreds of millions in incremental revenue, and frees up sellers to engage with more customers at a deeper, more strategic level. In our customer support division, Gemini-powered solutions have managed over 40 million customer sessions so far this year and resolved hundreds of thousands of customer inquiries, and we're just getting started. As always, I'll wrap with the progress we're seeing across partnerships where customers tap into the strength and breadth of Google's products to accelerate their transformation. Revolut, the global financial services company, leverages Google Cloud's Vertex AI platform and Gemini models to help power its advanced customer service chatbot, develop new hyper-personalized financial products, and offer predictive insights. Revolut is also increasing its presence on YouTube, adopting VO3 for personalized creatives, making Google a key ads partner for delivering growth and launching new markets. In closing, I'd like to thank Googlers everywhere for their contributions to our success, and as always,
yeah, I mean, the biggest thing, guys, that I will be always open and honest about,
of course, a huge thanks to all of you as we celebrate 25 years of Google Ads. If you're trading on prediction markets and
stuff like this, you're going to go through a ton of variance, even if you're profitable over a long period of time.
Thank you, Philip. My comments will focus on year-over-year comparisons for the third quarter,
you know, you're going to have down periods, you're going to have up periods.
I will start with results at the Alphabet level, and will then cover our segment results.
But, like, you're going to have losses.
Some
if you're not having
on
losses,
our outlook for the fourth quarter of 2025.
If you're a profitable trader,
we had an outstanding quarter in Q3,
but I say that,
continuing the strong momentum we've had throughout the year,
in the long run, so like,
delivering double-digit revenue growth across
really
search and YouTube advertising,
over the long
subscriptions,
run in terms of, like,
platforms and devices, and Google Cloud.
Kevin,
Consolidated revenue
if you ever
reached $102.3 billion,
extremely small.
A 16% year-over-year increase.
Gambling world, yeah. I mean, I think it's a lot easier to be profitable in our prediction market.
Total cost of revenue was $41.4 billion, up 13%.
I mean,
TAC
I would just
was
say
$14.9 billion, up 8%.
Low
Other
volume,
cost of revenues was $26.5 billion, up 16%. With the increase
but yeah, start
primarily
with like
driven
legitimately,
by
yeah,
content
$100
acquisition
and
costs,
put like $10
largely
on it.
for YouTube,
you know,
followed by
to the
depreciation
point where you don't like
and other
worry
technical
about
infrastructure
how much it is,
operations
and then
cost.
test it with
Total
that.
operating expenses
you know,
increased
and then
28%.
If you grow your $100 to say $500
R&D
over like 3
expenses
months,
increased by 22%,
then you can start to feel confident
driven
that you
by
found an edge, and
compensation and
slowly
depreciation
you can scale
expenses
up.
related
Like,
to our AI
there's
efforts.
people like Probability
Sales
Duck,
and marketing expenses
who's
were
an
flat.
unbelievable sharp. He
And
literally
G&A
started with
expenses
$100
increased
and he
meaningfully,
turned it into
primarily due
100,
to
like
the
$50 grand.
$3.5 billion
So
charge related
there's
to the
no
European
need to start
Commission
big, guys.
fine
I always
mentioned
recommend
in the
starting
earnings
small.
press release.
And that's how
Operating
you're going to
income
learn.
increased
And then when you
9%
make
this
mistakes,
quarter
which are going to
to
be inevitable,
$31.2 billion,
like listen to Logan. This
and
guy is
operating margin
Logan
was
is like an absolute
30.5%.
sharp, really good trader.
Excluding the EC
He lost
fine,
3K
operating
this month
income
or last month,
22%,
or yeah, this month
and
on a
operating
misclick.
margin
4.5K next day on
33.9%.
distracted bonding mentions
Operating
incorrectly.
margin
Then another
benefited
2
from
the
strong
next day.
revenue growth and
Also
continued
distracted
efficiencies
bonding.
in our expense
Like
base,
this is a very seasoned
offset by
trader
the
who knows
legal
what he's
charge
doing, and
and a
he's lost a
significant
few
increase
grand
in depreciation
on just like
expense.
simple mistakes. I've also done
Other
the same
income and
thing. I lost
expenses was
$4 grand on a
$12.8 billion,
misclick on a UFC
primarily due to
market, and I've
unrealized
traded on
gains
these things
in
for
our
a year and a half.
non-marketable
So
equity
start with a
securities
small
portfolio. Net
That's,
income increased 33%
you know, that
to
way, if you
$35
make a
billion,
mistake interacting
and
with order
earnings
books,
per
things
share
like that, it'll be a
increased
small
35%
impact.
to
No need to start big.
$2.87. We generate free cash
Oh,
flow
acquisition
of
yes just hit.
$24.5 billion in the third
Nice.
quarter and
That was a freaking
$73.6
lock.
billion
I love
for the
that one.
trailing
Like
12
I said, I
months.
was going to size up if it went lower.
Free cash flow in
I was gonna try to.
Q3 benefited from
But
strong
there's our
operating
first
cash
yes
flow
hit
and
on
recent tax
acquisition.
changes.
That was super
regarding
undervalued
the
at
timing
69
of when
cents. I would have
research
sized
and
up more if I
development
could
costs are
have. But I
expensed
like it.
and
There we go.
assets are depreciated. This was partially offset by higher capex. We ended the quarter with $98.5 billion in cash and marketable securities. Turning to segment results, Google Services revenues increased 14% to $87.1 billion, reflecting strength in Google Search, YouTube advertising, and subscriptions. Google Search and other advertising revenues increased by 15%.
You want to trade
to
like $20 on
$56.6
Indiana
billion,
quarterback to win Heisman?
representing
I mean,
another robust quarter with
if you
continued
want to do
growth
that for fun,
across all major
then
verticals,
go ahead and do it.
with
You
the
know,
largest
I
contributions from
trade
retail
on
and
Kalshi all the
financial
time
services.
for fun, like college football.
YouTube
I'm not going to have an edge
advertising
long
revenues
term.
increased 15%
You know, taking
to
college football
$10.3
money
billion,
line plays. But do I love
driven by
college
direct
football? Yeah.
response
So I'll throw
advertising,
$100
followed
on
by
what
brand.
teams I want to win over the weekend.
Network advertising
Um,
revenues of $7.4
but
billion
just know which
were
thing
down
you're
3%.
doing, right? Like versus trading
Subscriptions,
versus being
platforms, and
profitable long
devices
run.
revenues increased 21% this quarter to $12.9 billion,
Oh, you became
driven
the
by
favorite on
very strong
Kalshi?
growth in both
Yeah.
YouTube and Google One
I
subscriptions.
have Trinidad Heisman
Google
shares
Services
for
operating
Ole
income
Miss,
increased
'cause I'm a huge Ole Miss
9% to
fan. I just love Lane
$33.5
Kiffin.
billion. Operating margin
I think Ole
declined year
Miss
over
is
year to
super undervalued this year.
38.5%.
Like they're still
as
like
healthy
5%
revenue growth and
for
continued
national championship
efficiencies in
odds.
our expense base were offset by the
They
impact
have
of the EC fine,
the easiest
which was
schedule
fully
for the rest of the
reflected
season.
in the Google
Granted,
Services segment.
Ole Miss always finds a way
Turning to the Google Cloud
to
segment,
throw it
which
away.
again delivered very
But,
strong
like,
results this quarter.
all the SEC
as
teams
Cloud
they're going to play in their
continued
next 3
to benefit
games
from
are
our
at home.
enterprise AI
Maybe they'll
optimized
choke
stack,
like they always do, but if
including
they
our own
don't,
custom
they're going to be a
TPUs
one-loss
and our
team potentially
industry-leading
going
AI
into the end of the
models.
season. Sure, you have A&M,
Cloud revenue
you have
increased by
Alabama who have no conference
34%
losses,
to
but
$15.2 billion in
I
the
love
third
Ole
quarter,
Miss.
driven by strong performance in GCP, which continued to grow at a rate that
I
was
think if
much
they make the
higher
playoffs,
than
they
Cloud's
can beat
overall
almost
revenue
anyone.
growth rate.
I mean, Ohio
GCP's
State
growth
is on
was
another
driven by
level, though.
enterprise AI products, which are generating billions in quarterly revenue. We had strong growth in enterprise AI infrastructure and enterprise AI solutions, which benefited from demand for our industry-leading models, including Gemini 2.5. Core GCP was also a meaningful contributor to growth. And we had double-digit growth in Workspace, which was driven by an increase in average revenues per seat and the number of seats. Cloud operating income increased by 85% to $3.6 billion, and operating margin increased from 17.1%
I
in the
can't
third
see
quarter
Ole
last
Miss
year
beating Alabama or
to
A&M.
23.7% this quarter.
I totally can see them
The
beating both
expansion
of
in
them.
cloud operating margin was driven by strong revenue
Alabama is
performance
completely
and
overhyped
continued
this year.
efficiencies in our expense base, partially
A&M
offset by higher
maybe is
technical
really good. I
infrastructure
don't know.
usage costs,
But they almost
which
lost to
includes
Arkansas like a week
depreciation
ago.
expense and other operations costs such
They
as
can
energy.
totally beat Indiana.
Google
Obviously
Cloud's
can beat
backlog increased 46%
Georgia
sequentially
Tech. Oh
and
my
82%
gosh,
year
Indiana?
over year,
No
reaching
chance on winning
$155 billion at the
national
end of the
championship.
third quarter. The increase was driven primarily
Ohio
by
State
strong
A&M,
demand
yes,
for
I can see it.
enterprise
I think
AI.
A&M's going to choke. They
As
always
Sundar
start off
mentioned
really
earlier,
good in the
Cloud
season, then
has
they
signed
choke.
more
So
billion-dollar
I'm pretty
deals in the
bearish on
first
A&M,
9
but they
months
do have
of
a killer quarterback
2025
this year.
than in the past 2 years combined. In other bets, revenues were $344 million, and operating loss was $1.4 billion in the third quarter.
Okay, let's not
Within
mention
other bets, we
profitability
continue
here.
to
If we
allocate
survive
more
through CFO
resources
with no
to
profitability,
businesses
that'd
like
be good.
Waymo, where we see opportunities to create
Waymo, but don't say
substantial value.
Wiz. Don't say Wiz.
With respect to CapEx, in the third quarter, our CapEx was $24 billion. The vast majority of our CapEx was invested in technical infrastructure, with approximately 60% of that investment in servers
not winning
and
national
40%
championship.
in
I
data
don't know,
centers
that's my
and
opinion.
networking equipment.
I only know
In
college
Q3,
football.
we returned
I'm
capital
obsessed
to
with college football.
shareholders
But
through
I'm also
repurchases
very
of stock
SEC
of
biased. That's why I'm
$11.5
going to tell you
billion
Georgia Tech sucks.
and
you know?
dividend payments of
'Cause
$2.5
ACC,
billion.
you know.
Turning to our outlook, I would like to provide some commentary on factors that will impact our business performance in the fourth quarter of 2025, as well as an updated outlook for CapEx for the year. First, in terms of revenues, we're pleased with the overall momentum of our business.
Still
At
no
the current
profitability
spot
hit.
rates, we could
If we make
see
it
an
through
FX
CFO
tailwind
without
to our revenues
profitability,
in
that's going to be
Q4.
looking really good.
However, the volatility in exchange rates could affect the impact of FX on Q4 revenues. As for our segments, in Google Services, year-over-year comparisons in advertising will be negatively impacted by the strong spend on U.S. elections in the fourth quarter of 2024, particularly on YouTube. In cloud, demand for our products remains high, as evidenced by the accelerating revenue growth and the $49 billion sequential increase in cloud backlog in Q3. In GCP, we see strong demand for enterprise AI infrastructure, including TPUs and GPUs, enterprise AI solutions driven by demand for Gemini 2.5 and our other AI models, and core GCP infrastructure and
Gemini
other services
2.5 is so good,
such
by
as
the way.
cybersecurity and data
You guys don't
analytics.
use it.
As I've mentioned on previous earnings calls, while we have been working hard to increase capacity and have improved the pace of server deployments and data center construction, we still expect to remain in a tight demand-supply environment in Q4 and 2026. Moving to investments, we're continuing to invest aggressively
Trading no
due
in
to the demand we're
profitability?
experiencing from cloud customers as well as the growth opportunities we
Let me
see
remind
across the
myself.
company.
I mean, I mostly just
We now expect
handicap
CapEx
this
to be in the
based
range
off
of $91 billion to
historical
$93
frequencies.
billion
I didn't put
in
a lot of
2025.
like
up
they
from our
mentioned
previous
profitability
estimate
twice
of
last
$85
earnings
billion.
calls, then went three before
Keeping in
that
mind
without
that the
saying it.
timing of cash payments can cause
So I
variability
got in at
in
33
the
cents.
reported
I thought there was
CapEx
kind of
number.
value there, but we'll see.
Looking out to
I think
2026,
if we
we
make it through
expect
the
a
CFO
significant
speech
increase in
without
CapEx,
them saying it,
and we'll provide
I mean,
more
I'm not
detail
sized
on
very
our
big
fourth
here.
quarter earnings call. In terms of expenses, first, as I've mentioned on previous earnings calls, the significant increase in our investments in technical infrastructure will continue to put pressure on the P&L in the form of higher depreciation expenses and related data center operations costs.
So we lost 300
such as
on
energy.
Meta.
In the third quarter, depreciation increased $1.6
We
billion
made
year over year to
$640 on
$5.6 billion,
Starbucks. So
reflecting
plus
a growth rate of
340.
41%. Given the overall increase in CapEx investments,
And that was
we
kinda
expect
it. I
the
didn't get
growth rate in
filled on any of these
depreciation to
other
accelerate
ones.
slightly in Q4. Second, we expect sales and marketing expenses to be more heavily weighted to the end of the year, in part to support
kinda
product
riding on
launches and the
Google a
holiday
little bit.
season. Q3 was a strong quarter, and we're excited with the adoption of our AI products, helped by a rapid pace of innovation and great execution by our teams. This translated into
that's
strong
cool.
momentum
You
in
write
search,
2 newsletters
YouTube
on
ads,
prediction
subscription
markets?
platforms and devices, and cloud, resulting in our first $100 billion plus quarter. Now, Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to
All right,
ask a
Q&A
question, you will need to
section.
press *1 on your telephone.
Hopefully they don't
To prevent
ask
any
about the
background
Wiz
noise, we ask that
acquisition
you
for
please
any
mute your line
updates.
once
I
your
don't think they
question has
will,
been
but
stated. Our first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Great. Thanks for taking my questions, everyone. The first one, maybe for Philip or Sundar, it's on agentic e-commerce and agentic travel. There's a lot of
Agentic
external Wall Street discussion about agentic e-commerce potentially monetizing at a lower rate than search. So the question is, what factors are you most focused on to sort of ensure a smooth transition for your search business and for your advertisers as you move over to a more agentic world? And the second one, Sundar, is on Waymo. How far are we from an integration of Waymo into more of the core Gemini capabilities and the users in the platform? You're taking your user data of where I'm going, what hotel I'm staying at, what airport I'm staying at, and have me integrate that into Waymo. You can actually have users use their profiles to pre-schedule Waymos. How far off is
I
that?
love
What do we
Waymos.
to
Have
do?
you guys ridden Waymos?
Look, Brian, great question. This is all early, but we see agentic experiences really as additive to the way people seek information. It helps us answer people's tough questions. It helps people get stuff done, and it helps businesses in the process. And we're working on multiple agentic experiences across key verticals such as travel, commerce, shopping, and so on. And we're paying a lot of attention to creating a seamless user experience, but also to the fact that we need to integrate different partner ecosystems in a way that it creates value for them. And by the way, we're also working closely with a lot of our partners on the other side through our cloud services to improve their own agentic experiences. And so maybe we go a little deeper on the shopping side, where we actually use AI already very actively to improve the shopping experience. As you know, we launched a more visual experience on AI Mode that gives people a much more intuitive conversational way to shop. You can simply describe what you're looking for now, like the way you would talk to a friend, and it will show you the visual shopping results. And then we think about building an agentic shopping future, and it has to be one, again, that benefits both users and merchants here. And you know that AI also introduced new agentic checkout, which will let shoppers use like agentic AI to buy products from merchant sites and so on.
Were you actually
we have a
on
partnership with PayPal to help merchants build agentic commerce
Darn,
experiences.
somebody already ate
We
the
have
shares for
new protocols
profitability.
for
Was that one of you
agent-to-agent
guys? Did somebody
transactions
just
and
eat
so on and so
profitability no shares? I was looking at them. I hope you didn't.
And
But it
Brian,
was probably just
on
someone random.
Waymo, great question. I was reflecting,
Wow.
I think, on the exact same topic.
Wiz, no, all the way up to
I'm scheduled to
99.
meet with the team to do a review on it in a few weeks out.
Was not sized on part of ahead of
look,
time.
it is
you
an
did.
exciting
Look,
time. Waymo
you gotta do
clearly,
it for the meme.
is scaling up, particularly in 2026. And I think the possibility, as you said, of Gemini, particularly with the multimodal experience.
Are they going to
as
talk
well
about
as services
Gemini
like
3?
YouTube. I think there's a real opportunity
kinda
to make the in-car
right? 'Cause
experience
Gemini 3 's gotten
dramatically
really
better.
delayed.
definitely something we are excited about, and you'll see newer experiences in 2026 for sure.
Great. Thank you both.
Our next question comes from Doug Anmuth with J.P. Morgan. Your line is now open.
Thanks for taking the questions. Philip, maybe you can just talk more about some of the drivers of the core search strength. And I guess in particular, when you think about AI overviews and AI mode, we know that
AI
growth is
this,
accelerating,
AI
but
that.
can you help us understand from there kind of what happens in terms of clicks per query and conversion rates and pricing in these AI-driven search formats? And then Anat,
Getting so rich in
can you
EV,
talk
just not
about where you
dollars.
see
I know the
opportunities in
feeling.
core cost base as you look to make
That was me
room
on
to
Powell
absorb
today.
the rapid growth in
I had so
infrastructure
much
and
EV in that Powell
depreciation
speech.
going
I don't even
forward?
want to.
Thanks.
Oh, so much EV.
So let me give you a bit of vertical color first. In Q3, search and other revenues again delivered growth across all major vertical, as we said. It was from retail and financial services. Healthcare was also a contributor to the growth here. Our new AI experiences, you mentioned them, AI overviews, AI mode, continue to drive growth in overall queries, including commercial queries, really creating more opportunities for monetization. AI overviews are scaling up and are working for our entire user base. We're now scaled to over 2 billion users here, and we're continuing to expand ads in AI overviews in English to more countries across desktop, mobile, and so on. And as I've shared before, for AI overviews, even at our current baseline of ads, below and within the AI's response, overall, we see the monetization at approximately the same rate. So over time, we're excited about the opportunity of richer experiences in AI mode and AI overviews to basically open up then the opportunity for also much richer placements. I think, as I've said on a prior call, we managed a business to drive great outcomes for our users and an attractive ROI for our advertisers. We don't really manage to paid clicks and CPC targets. But as you will see in the 10Q, paid clicks were up 7% year on year, and CPCs were up 7% year on year.
Doug, and to your question around where else can we see more opportunity for efficiency and productivity, and I think you heard me say before,
I can't believe I wasn't able to size
this is
up
not a one-time type of effort, but rather an ongoing way
why
in
did
which
I
we manage
post
the
my
business.
positions before I had
And
at
the
least
key
1,000
here
shares
is
in
that
all of
the
them?
more we drive
How stupid
productivity
am I?
across our business, the more we
Why
can
am I
invest
focusing
in the
on
business
content
for
so
growth
much,
and obviously
guys?
continue to
I should have
drive
waited till I had
improvement
at
in the
least
P&L.
1,000 in every
Some of the
position.
areas are things that you've
But
heard
I
us talk about in the
stupidly
past, such
posted
as
my earnings plays.
moderating the pace of headcount growth, optimizing real estate footprint, but also as we invest more and more in our technical infrastructure, ensuring that we are optimizing that build out and the overall technical infrastructure we have. You know that a lot of the data centers, for example, that we build ourselves, so they're optimized and we make sure we do them in the most efficient way. Sundar mentioned on one of the previous calls the productivity associated with leveraging AI for Google. So there's the example, the percent of code, now nearly half of all code generated by AI. That's a way for us to leverage AI to drive further productivity across the business. And obviously, we always look at making sure that when we provide services or products, that we get the right economics and the right value for what we provide. So one good example is Shorts, which has a lower revenue share than InStream, that it helps to improve some of our gross margins. So this is an effort we have ongoing. I've mentioned in the past that we have a headwind with depreciation, obviously increasing alongside our CapEx increase. So we have efforts across the organization to ensure we run the business in the most disciplined and productive way while continuing to invest for future growth.
Thank you both.
Our next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you so much for taking the questions. Maybe two, if I could. Sundar, when you think about your custom silicon efforts across the organization, can you reflect a little bit about the opportunity set you see with each passing generation of custom silicon, both in terms of driving operating efficiencies inside the organization and potentially increased monetization efforts around those outside of the organization? Second question would be for Philip. Obviously, we can see the YouTube advertising revenue number in the reported results. Can you reflect a little bit about the scaling of the subscription side of YouTube offerings, and how the two parts in together maybe represent an interesting framework in thinking about the monetization side of YouTube increasingly being a mix of both ads and subscription. Thank you.
Eric, overall, I would say we are seeing substantial demand for our AI infrastructure products, including TPU-based and GPU-based solutions. It is one of the key drivers of our growth over the past year, and I think on a going forward basis, I think we continue to see very strong demand, and we are investing to meet that. I do think a big part of what differentiates Google Cloud, effectively, we've taken a deep full stack approach to AI. So we are, and that really plays out, right? We are the only hyperscaler who's really building offerings on our own models.
Get all the copy trade fills. Yeah, exactly.
And
that's what I gotta be doing,
Logan.
Logan.
Highly differentiated on our own
I gotta be posting
technology.
my plays,
so
and then I gotta just set my limit orders to sell out.
Give
take
us
all
the
the pre-market gains.
To continue
but I would never do that,
growth
guys.
and
I would
operating
never do
margins
that
in cloud as we have done in the past.
When I post plays,
also,
I hold
from
my
revenue,
positions.
Sets
I mean,
the
Kim
infrastructure
Jong-un,
portion
I
of our
sold out at
business,
like 91 cents
to
today
be
or
a
something.
growth driver
But like,
looking ahead as well.
it was public that no longer Trump is
And to
meeting
the second
with
part
them,
of your
so
question,
I'm not gonna hold that
look,
till
just
end of
taking a
year.
quick step back,
But,
we often describe
my
YouTube's
goal
business as a flywheel.
is to be
Obviously,
the
first all
positive
starts with the
person in
creators,
this
and we have
industry where
significantly
I'm not
invested here
selling
to
you
be the
picks.
place that
I'm just
YouTube
posting
creators
my
really
picks. This
call
is just my
their
own
home.
journey to
That's a big piece of
100K.
it.
You
The
can
number
follow
one
along
piece.
or whatever.
Viewers, of course.
I don't
YouTube
want to
has
become
billions of monthly
a.
logged in users, and everyday people watch
I don't want
billions
to
of
become
hours
like
of
a
video.
pick
And
person.
we
You know
talked
what I
about
mean?
how our
There's so many
recommendation systems are
smarter
driving
traders
robust
than
watch
me,
time
by the
growth,
way, like
and so on and
so
so on.
many.
So on the monetization
That's why
side,
like maybe I can
YouTube's
squeak out
business
like
is
a
really
few grand in
powered,
profit
I
a
would say,
week, which is like
let's call it a
okay.
twin engine
I'll, like,
monetization strategy,
foster
combining its
probability
advertising
duck.
business and its growing
Like, these are
subscription services. Both YouTube
who
ads
are
and subscriptions saw
way
strong
better than
growth
me and are
this
squeaking
quarter,
out, like,
and so
insane
looking at
profit.
YouTube
I mean,
Music
even
and
Logan,
Premium,
I mean, he'll
users
profit
are on
like
average
40K in a
delivering
day.
more value to creators, to music, media partners,
Yeah,
and YouTube
I mean,
itself than
Logan,
even
that's like
ad-supported users do.
because I'm focused
so
on
in other
content.
words,
That's
on
the
average, YouTube
negativity
Music
I'll
and Premium
take in the
subscriber
sense of like
generates a meaningful
I'm gonna
higher gross
hold most
profit,
of my positions.
than
Sure,
they
it's
were
not
simply an
advantageous, and
ad-supported
sometimes
users.
I could sell
fans
it.
come from all over the world. You know this, and this engagement through ads
Sometimes I
and
could
subscription
sell it for like a good
generates YouTube's
price,
revenues
especially after
and
I
funds
post a
what I
position,
started
because
with,
people will
these,
often just
creators
like
here, and this then
buy
drives
through
more
market
viewership
orders
and
at like
engagement and so
terrible
on, and that's the
prices.
flywheel. And so our priority continues like this
Picks and
growth
copy
cycle.
posting
We're happy
realistically
with
are
this
bad
twin
for the
engine
ecosystem.
monetization strategy.
Yeah, I probably agree. It's kind of a bad thing, especially with like
Our
a
next
liquid
question
order
comes
books,
from
like with
Mark
mentioned markets, right?
Shmulik with Bernstein. Your line is now open.
Yes, thanks for taking the questions. Sundar, with the strong adoption of Gemini, AI mode, and overviews across the user base, are there any meaningful differences to call out?
Like
kind of
I've had
around the
people
behavior
DM me
and
trying to
depth of
launch like
engagement for those
tokens
users
and
across
prediction
the
markets, all this
entire
stuff.
Google ecosystem?
I'm like, I
and
am
then,
not
Philip, I
gonna
know we kind of asked
freaking
this,
get
most
involved
quarters,
in a
but I'm
token
curious, kind of with some of
for
the
my
adoption
life.
you've seen
Oh my
around AI
gosh.
overviews and mode. How you see the economics of search evolving with the higher commercial and total query
All I
volume,
like to do
and how it
is
kind of
I like
compares
to
against
curate
the incremental cost to deliver these results. Thank
good
you.
clips on X. I sprinkle in a little bit
Mark,
of
look, I
rage
think
bait.
Obviously, AI
I sprinkle
overviews
in
are
a little
a
bit
natural part of
of
a Google experience, and
absurd
so engagement
absurdism,
is very, very
and
high.
then I sprinkle a little bit of
I would say
sarcasm. That's what makes
AI
my clips
mode,
go
you
do so
have
well. You got to mix them.
varied cohorts
You need
that
the
are people
rage
who
bait
are
so people will quote
casual
tweet your
users who are
post
checking
and
it
be
out,
like,
and then
"This
but
is
there's a
just
core
gambling"
group
or whatever.
which really
Then you need
likes
the
AI
absurdity
mode
so
and is
other people will
passionate
see
about
it and they'll
and
be
so
like,
you
"This
see
is
the
so
early
stupid. I'm not
adopters,
excited for the future." Then you need the
product is
sarcasm so
resonating
like
very
people
strongly, and
in
they're
the
seeking
community
it
will still
out.
like it.
So I think that's
That's
how
what you
I
gotta
would highlight
sprinkle
the
on there.
difference. With Gemini, again, sort of engaged
You would
user
farm a
base
copy
who
trade
are
bot if
seeking
someone
out
created it.
product and
Logan,
and so
what's
on.
so funny is
But
there was
across
one
the
of those
board, I think,
bots for
you know,
like
the trajectory has been.
there was one of
we
those
are
bots
definitely seeing
for
in each
leverage.
of those use
I don't know if you
cases a set
remember
of
them.
early
They were
adopters, and then more people coming in, and the people who are using it continue
taking
to use
over,
it more
where like
over time and report
you could trade
high
with like
user
10x
satisfaction.
leverage
So
on like
I would
these
say
platforms.
the underlying product metrics.
And I
are
remember we were
pretty,
trying to like
encouraging,
farm
to
accounts
see
that
as
had
well.
leverage. because you
Look
could
into
just
the
like
second
if you had
part
an
of your
illiquid order
question.
book,
I
could
think we
change
covered
the
before.
price
Sonder
and
covered
force
the
it
Corey
to do like
development,
mass
and as I've
liquidation,
just
and
said
then you could have
before,
limit
for the AI
buys set
overviews,
when it
even at our
liquidated.
current baseline of
I mean,
ads, right, whether above,
this is all a
below,
joke. This is all
and within the AI
theoretical. We didn't do
response,
any of
overall,
that,
we see
but,
the monetization at
theoretically.
approximately the same rate, and this is a great baseline for further innovation. We talked about this. We're excited about where this can go.
The best sports
and,
handicappers
on
are
the
honest.
AI mode
Maybe
side,
15%
we're
of
testing
them.
ads in AI mode, and we'll continue
Honestly,
to test and
what I
learn
kind of hate
before
about
we
the
expand
sports
this any
gambling
further.
world
So this in combination
is that
with
like
what
you
we
have
mentioned
all these
about the
people
commercial
that are
Corey,
selling picks,
overall development,
and
I think we're in a
99%
good
of them
place
are
here.
actually not profitable long term.
You could also argue that on queries
Like you
that
can
historically
actually
have
track
not been
all
well
my
monetized,
public
we
trades,
think there's a
positions,
potential
profit on
opportunity here,
Kalshi and know like
where you can
whether or
obviously
not I'm
imagine that
profitable.
we can
Again,
build
I
this
don't want
out
my
with
selling
smart
point
AI
to be
integration.
like, oh yeah, I make a little bit of profit in mention markets, but like at least
next
I'm like
question comes
actually
from Michael
somewhat
Nathanson
profitable
with
versus just like some random
MoffettNathanson.
tout
Your line
on
is now open.
Twitter that's not profitable. I mean,
Thanks.
it's
I have
fine
two,
if they
one
want to
for-
do it. You're just
one
having
for not.
fun. Like I
So,
love
it's
the
clear
fade
that
god
when
people
use
on sports
AI
betting
mode,
Twitter.
the query length is
That's like
much longer.
funny to
Can you
follow and
talk
stuff,
about how
but
that longer length
you know, as soon
maybe
as these people are
impacting your
like
ability to
selling,
drive ROAS and what you're seeing in terms
yeah,
of
it does have a lot of garbage. As soon as people are like
benefits
selling
of maybe
picks
longer
and like
query length,
private
and then
Telegram
or not,
groups,
you came
I don't know. It just is like
Alphabet
really.
from a pharmaceutical company. You've been there more than a year. You
My
talk a bit
goal
about how
is
you're
to give
working
viewers
look at ROIC internally
knowledge
and what
on
early
how
signs are you
to
seeing
identify
that gives you
edges their
confidence that this
own
spending
way.
is,
You know,
is really
like
driving better returns long
guys,
term.
if I find an edge
Look,
that can make me
Sonder
like
said AI mode now has over like 75
a
million daily
month
active
and like
users in the
repeatable
US,
profits,
and we see
I
strong
will
and
never tell
consistent
you that
week-over-week
edge.
growth in usage.
Obviously, why would
since
I?
launch, and the queries
But
doubled over the quarter. And as I also
I will
mentioned,
tell
we're
you
testing
high
ads in
level
AI
how to
mode. We'll
find
continue to
edges. You know what I
test
mean?
Before we expand any further, it's really too early to tell and go into any of the details.
I'll
of
tell
that
you high
testing.
level so that you can identify edges yourself.
Yes, and
you know?
the question related to ROIC and how we look at just overall
esports has
our
5x the edge,
business
just no
and where do we
liquidity. I
see
mean,
early
I
signs
believe
that are
it.
encouraging.
Illiquid
So first, I
markets
would say
are
it's
like
not just
super
early
big
signs
edge.
because we're seeing
Yaza,
returns,
what do you think of
obviously,
my
in the cloud
anyone's
business.
legend
You've heard us
futures play in
talk about the fact that we
Worlds?
already are generating
Why are
billions
you
of
so
dollars
interested?
from AI in the quarter.
It's my favorite
But then
hobby,
across the
Varun.
board, we have a rigorous framework and approach by which we evaluate these long-term investments
I
that are
talk about
meant
it.
to do
It's all
two
I think
things.
about
One
every
is to
day.
ensure we build a resilient growth profile for the company, but also
It's
that
a
we
W.
meet the
Gusta
demand
knows.
of the
All right.
customers that we
Good.
have.
I feel good
here
about
in the
anyone's
more
legend.
near
I don't
and
even know when they're
midterm.
playing. I think they're playing
So
Friday
we
night or
look at it
something.
across the business. We evaluate the potential return for each one of them, whether it's in cloud, and I think that's more visible, obviously externally, given that you see the revenue
I
generated.
like
and the
AL
fact
over
that we're
T1
unable
better
to meet
straight
at
up.
this
Yeah,
point customer
I
demand.
do
We
too,
have
but
more
you never
demand
know
than
with
we have
T1 during
supply.
Worlds, man. They
In
just
our
turn
ads
into
business, you see the fact that we're investing to
another beast.
transform
Holy cow, I was
search, as you
scared
heard
regulator
from Philip
hit.
and Sunda with
Looks like
AIO
we're
and
okay.
AI.
We have
mode,
14
so
minutes
we're,
left
and excited to see what our
ride the rest
investments
of
are,
this
how the investors
earnings
are
call.
helping advertisers as well. YouTube, where it's helping power recommendations. So when we make a decision on
Holy cow, I
investment in
keep
the
getting
long
scared
term,
that I
we
lost
go through a
because
very
people will
rigorous
pull their
process
sell
of
orders.
assessing what the return could be
but I guess
and
I'm
over what
okay.
time
I'm
frame we
lose.
will see that return.
Knock on wood.
To give us the high level of confidence to then invest and make those investments for
Yeah,
for
exactly,
the long term.
Logan.
So
it's like
it's a very
if you can be
rigorous
profitable
approach.
over the long run, why are you going to sell a course? Why don't you just use it? It's the same thing with building tools. You know, it's like
Our next
if somebody
question comes from
purports to
Ross
build a
Sandler with
tool that can
Barclays.
like tell
Your
you
line
what
is
trade
now
to make,
open.
why would you ever market that? Why don't you just use the
Great.
tool yourself and make profit?
About 20% of
Like,
Google's search
there are
queries
great
commercial
tools you can
historically,
build.
And
I'm going to turn the thing down. There are great tools you can build. Like, for example, I pay for a transcript tool, right? That's not telling me what to play. That's not telling me what trade to place, but it's giving giving me data so I can use it to make my own decisions. That's great things to build. Those are things that will be useful long term, because it's just providing data to traders. A terminal is another great option. It's not telling you what to trade, but it might make it better for you to trade, I guess, or like make it easier for you to trade. So the value's there. But anyone who purports that they're going to send you picks and or have a tool that's going to tell you picks that's going to be profitable over the long run, it's kind of stupid.
here. So I think it's important to separate those two things. And I personally also see, this is what I just said in my last remark, that I think over time there's an opportunity to actually take, let's say, queries that are not fully commercial, but could have
and that's because
adjacent
is my number
commercial
one
relationship
like, I grow in the space.
To basically expand this into more attractive ads
so
offerings without
while
really creating a really interesting user experience at the same time.
So that's why like sometimes I'll share
and
like
the only
little
thing I would add
edges,
is just stepping back broadly, I think
you know,
AI overviews in AI mode are, you know,
you can share
dramatically improving search.
Of
We can see it in
so many,
user
like,
satisfaction, user quality, all our metrics, and they're universal in the nature. They apply across
they think they're gonna,
the universality of human needs. So I think we are seeing it in breadth, and so
99%
naturally
of people
over
are going to
time
misapply the edges.
that'll apply to commercial categories as well.
Do it well. Okay, knock on wood, guys. Like we are freaking cleaning.
Our next question comes from Ken Goralski
like,
with
we're
Wells
5 for
Fargo.
5, and I
Your
had
line is
33
now
cent
open.
plays. I had 65, 59 cent plays.
Thank you very much. 2 questions, please.
Cleaned up on
First,
these earnings. I really wish I had gotten more shares before
it appears more and more clear that all the new modes, whether at Google with Gemini overview, AI overviews, AI mode, even ChatGPT, is growing the addressable market.
I think if you
for
were,
engagement in search-like behavior.
There's someone
Could you
speaking
talk
in background.
About
Can't hear
what
very well.
gives you confidence that it will also grow the addressable
that person
market
in the background
for
is
marketing activity and overall revenue associated with that behavior?
This is a mentioned market for an earnings
question
call.
one. And question two is just more
I can
about
turn it down.
as you think about AI mode, AI overviews, and
You seeing Trump's notes was 100% edge. Yes. By the way, guys, the whole Trump notes thing, I talked to someone who found it when that happened. Did I share that publicly when we saw it? Of course not. I'm going to eat the shares myself. But, you know, a week later, I made that post about it because it was funny, because it was a real edge that we found. But
bit about how you think that will progress over the next 12 to 24 months. Thank you very much.
Hannah, you got to lock in on Kalshi mentioned.
Ken, thanks. Look, I think you know, it's a dynamic moment, and you know, I think we are meeting people in the moment.
I will say, Yaza, I have talked to like a hedge fund that wanted to get involved in exposure to prediction markets, because I was thinking, I was like, should I go all into trading or should I go all into content? But yes, Logan, I agree with you. Yaza, I agree with you. But I think if you build a tool for sports like market making or taking the other side of all those combos, you can be profitable long term to where it makes sense. So that's where I think hedge funds could actually get involved, because volumes and liquidity are really thick, and like having $1 million port is actually helpful.
To build a more personal, proactive, powerful AI assistant for that moment, and I think having the two surfaces, Search and Gemini, allows us to really serve users across the breadth of their needs. But over time, we will thoughtfully look for opportunities to make the experience better for users. And to the first part, I would broadly say, you know, as you know, I do think we've been consistently saying for a while now, this is an expansionary moment, and
I don't think it's unfeasible for a small hedge fund to have a
we are seeing people engage more, and I think when they do that.
Yes, it's too small to be a small focus, but like if me and another super sharp trader that I'm close with partnered and we had $1 million portfolio, I have very little doubt that we could turn that into $2 million in a year. So that would be worth it for a hedge fund. So, I mean, you know.
Great. Just a couple. Sundar, I think you mentioned Gemini 3 is coming.
Yes, I agree with you, Logan. It is kind of hard because you're limited by liquidity. So the typical like 20% rule would not work for a prediction market trader, because like getting 20% and 2% fees on top is not enough for all the effort involved in active trading.
The long-term profitability, anything we should be aware of? Thank you.
Oh gosh,
thanks,
profitability
Justin.
might
The
get here.
first on the pace of
profitability
frontier
already
model research and development.
I think profitability.
Look, I think you know, two things are both simultaneously true. I'm incredibly impressed by the pace at which the teams are executing and the pace at which we are improving these models.
I don't think the company.
But
has
it
said
also is
profitability.
true at the same time that each of the prior model you're trying to get better over is now getting more and more capable. So I think both the pace is increasing, but sometimes we are taking the time to put out
my new apartment?
a notably improved.
I officially move in tomorrow, Purple Kevin. So guys, probably no streams tomorrow, even though there's 5 earnings calls. I'm going to try to get some posts out about my plays for the earnings, but I'm moving into the apartment tomorrow. I'm still in this like piece of shit hotel room on a freaking tiny table, probably until like Friday or Saturday, because I don't know how fast I can set up in the new apartment. But starting next week, yes, Varun, come to New York. We'll start our prop firm. Honestly, long term, that'd be a ton of fun. I'm very confident we can make decent money.
Executing at pace. And in terms of long-term economics, I would say that, again, us being a full-stack AI player,
I don't want to celebrate too
early, the fact that we are developing highly differentiated products on our own technology, I think will help us drive a good trajectory here, as you have seen over the past few years.
Great, thank you. Thank you, and that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our fourth quarter 2025 call. Thank you, and have a good evening.
Wow. Let's go, guys. Let's freaking go. Okay? Like, you just got your CFA. Let me know if you need an econ guy. Hey, I got the CPA. We'll be the CPA, CFA, but my CPA is inactive, to be fair. Full disclosure, I don't want to get screwed over, but W earnings, guys, we lost like, let me go back to Powell. All right, how did we do on Powell? Wow, did they already resolve Powell? No, they didn't. I just can't find my Powell mentions. I guess it's... Where the hell is my Powell orders? Let me see. Pending. All right. We got cooked on Powell. We lost 2,700. You can see it here. Did I call it there? Did I crash out after Powell? Did I crash out? No, I did not crash out. Okay, I locked in. We go to Google. We're up $900 roughly. Maybe this will go even higher once this adjusts. Oh yeah, this will go higher. Let me see. What will Google end up at? Guys, by the way, 5 for 5 on Google. I can't believe I couldn't size up, but like 5 for 5 on Google. Let's get some W's, okay? So, wow, we made freaking 1,200 on Google. Yeah, 1,200 on Google. We made, we lost on Meta. I think I lost 300 on Meta. So 1,200 Google, so that's plus 900. Then we go to Starbucks. We made plus 600. So we're plus 1,500 on earnings today, okay? So we lose 2,700 on Powell. People are like, he's going to crash out. He's over. Then we make 1,500 on earnings. Honestly, imagine how much more I would have made if I was able to actually size up and I didn't stupidly post my positions before I'd already finished entering them. But W, guys, we just fucking cleaned up on earnings. That was like insane. I'm going to go through all the plays I posted this morning, but we cleaned up. That was some freaking sick earnings. And we got 5 more earnings tomorrow, okay? I probably can't stream tomorrow because I'm going to be moving into my apartment. But I will probably not sleep tonight, and I'll try to get all my plays out tomorrow morning. But I don't know if I'm going to have enough time to freaking accumulate play positions. So I probably won't post it till afternoon. I'm not going to make the same mistake. I'll actually get some positions. But thank you guys for tuning in. That was some great earnings calls. Let's go. 1,500 live on the stream.